Okay, welcome everybody. We are just about ready to start. For today's webinar, as I mentioned earlier, we're going to be using chat. Now that is in the lower right-hand corner of your screen, and you can use it to ask questions of the subject matter experts that we're going to have with us today. At the bottom of the chat box, I want you to locate the Send To field, and right next to that, I want to make sure that it says all participants or everyone or something to that effect. That way everybody can see the questions, so everybody knows what we're talking about, and the subject matter experts can see it as well. After that, just type in your question in the field below that and click send. If you need to ask a question over the microphone, just send me a message in chat and I can unmute you. It gets really loud and chaotic if we have everybody unmuted at the same time, so we just don't do that. And again, as a reminder, you can download your course materials through the slides, including the slides, through the link in the email that I sent. After you click on that link, you'll see the registration page in WebEx. Just scroll down a little bit to where you see the course materials section. And that material will be there for a little while after the webinar ends as well, so don't feel like you have to rush out there and do it right this instant. If you do run into any issues downloading that, go ahead and send me an email at taxtraining@tax.idaho.gov. And I have put that email address in the chat window. I am going to be recording this webinar. I will email the link when the recording is on YouTube and it's ready. That probably is going to be next week because it takes me a few days to process it to get the closed captioning mostly correct and that kind of thing. And I have the one from Tuesday that I still have to do. So it's going to be a little bit. Today we're going to have presenters from the Idaho State Tax Commission. That will be myself and Gordon Myers, the subject matter expert. We have Luis Estrada from the Idaho Industrial Commission will be with us. We're going to have Don Baltadanas from the Taxpayer Advocate Service, or TAS, which is an independent organization inside the IRS. And then we're going to have Irene Gonzalez from the U.S. Small Business Administration, or also known as the SBA. So let's see, it is 9:03. We have people coming in. Just go ahead and get started here. So my name is Stephen Taylor. I am from the Idaho State Tax Commission. I am the Educational and Outreach Coordinator. I've been here a couple of years. And I'm going to walk through what as far as from the Tax Commission's viewpoint, what you need to know about business and taxes for Idaho as a small business. Here's what we're going to cover. We're going to talk about registering your business if you haven't done so already, where to get your permits and how to do that, what to do once you start selling products, some really important information about the difference between employees and independent contractors. Luis is going to hit this on a really detailed level as well. It's very important that you pay attention to this part. We're going to talk about withholding and then income taxes and forms that you need to be aware of. And then we're going to do we're going to touch on electronic access tools that you have that are going to make your life easier. Okay. So the first thing, if you're starting your business, you're going to want to register and name your business with the Secretary of State. You're going to do this at business.idaho.gov/register-a-business. It does cost a little bit to do this. The last time I looked, it was about $25 for a smaller business, and I think it got up to $100 depending on whatever type of business you're doing. But you want to do that to make sure you get a name in there, make sure you get it registered. And then you're going to want to apply for your permits. You want to do this fairly early in the process because this can take some time. You're going to do, you're applying for permits at tax.idaho.gov, which we're going to go to a lot. And then you're going to click on IBR, or register your business. I am going to walk you through that here in just a little bit. And then you're going to create an account on TAP. You don't have to do this part, but I would really recommend it. TAP is going to make your life a lot easier because this is where you'll be able to file things electronically instead of getting a stamp and printing out a form and filling it out and sticking it in the mail and hope it gets here. So we'll walk through TAP. And the address has changed. You can also go to tax.idaho.gov and /TAP as well. You'll click on the little icon, and I'll show you that. That is also going to take a little bit of time. You can't really start the TAP account until you get your permits. So those two are probably going to take the longest amount of time. So while you're waiting, I would get an EIN from the IRS. They're not going to be required, an EIN, unless you have employees. But if you don't have one, you're going to need to use your Social Security number for business. And as Irene is going to mention to you, that's not optimal. You probably don't want to do that. The nice thing is that the EINs are free and they're easy to get. So I would recommend getting one even if you don't need it right away. And just as a side note, some banks require an EIN if you're going to get a business account. And then I would get a website. Irene is going to go through the importance of your presence online. It's from personal anecdotes. If we have let's say we have a food truck that comes to the site here, the first thing I do when that food truck rolls up is I look to see their website, to see what they make, what their menu is, that sort of thing. If they don't have a website and I can't look that stuff up, I'm probably not going. I have other things I got to do. Websites are getting almost mandatory now when you're doing business, so I would really recommend getting one. The nice thing is that there are a lot of, I won't say applications, but kind of websites and other tools that allow you to build your own website and do it so it looks really nice, and you can do it really quickly too. And they'll also host it for you, so that's good. And then finally, I would open up a business bank account. It's really important to keep your personal funds and your business funds separate so they don't commingle. It gets really hard to keep track of everything if they're commingled, so open up a business bank account so you don't have to worry about it. So we're going to start with applying for your permits. And where do we go to do that? We're going to go to tax.idaho.gov. This is our main web page. This is where we have pretty much all of our information. You'll see things like information for individual taxes, for business, for governance and research. You'll see information about tax refunds, the TAP. This is where you can go to get into TAP, and then some TAP help. But for our permits, we're going to go to business, because that's what we're talking about. And we're going to look for getting tax permits. We're going to click on that, and it will take us here. This is where we're going to get started. It gives you information about what you need to know as far as new businesses. We have two really helpful videos that are here. You may recognize the people in those videos. I can't remember if Gordon's in those or not. But those will walk you through some of the information that you need to know and things that you need to be aware of. When you're ready, you just click on Idaho Business Registration Application, that little green button right there. There's also information if you scroll down this page about existing businesses. So if you've already set up your business as a self-employed business and you didn't have employees, and now it's going really well, so you're like, I need to get employees, which I need to get a withholding permit to do that, which means I need to come in here and I need to fill out the form again to get a withholding permit. You can't edit one that's already been created, you'll just create a new one. And this kind of walks you through how to do that. Okay? But once you click on that green button, it takes you to this page, and this is the Idaho Business Registration System. And if you're returning to complete a registration, or you just want to see what you filled out, you'll put in your username and your password and log in. If this is new, or if you need to change your information off on one that's already been submitted, you're going to create a new account. When you go to create a new account, you'll create your username, your password, you'll fill in the information that they're asking, and then it becomes kind of this choose your own adventure page, if any of you are old enough to remember those, where the answer that you give to a question dictates what the next questions are. And so as a kid, we had these things called choose your own adventure books. And so you'd be presented with a situation, you make a selection, and then you'd move to whatever page. That's kind of what this is. If you say you're not going to have any employees, then it won't ask you questions about the withholding. So it varies. So you'll just start this, you'll just walk through it, you'll answer the questions. None of them are trying to trick you or anything. They're just asking for information so that they know which permits you're going to need for your particular business. And if you don't finish it in one sitting, then you can save it, and then when you come back, you can log in using the top arrow and just begin where you left off. Okay. Any questions about that? So why are we doing all of this? It says we're going to be in the business of selling tangible personal property. Idaho has a 6% sales tax on all tangible personal property. This tax isn't part of your income. It belongs to the state, and you're just collecting it for us. And I just want to say right now, thank you for doing that. We greatly appreciate it. So I have said tangible personal property 3 times so far. Let me explain what it is. Tangible personal property is anything that you can touch, you can pick up, you can carry, eat, or otherwise handle, not including real property. So, and then generally services or labor aren't taxable in Idaho. Yeah, I see that. Is it different for online-only businesses? That's a great question.
The answer is not really, except in certain circumstances. If, for example, if all of your sales are being made out of state and you don't ever sell anything into Idaho, you may not have to have a seller's permit for Idaho. Or if you are located in another state and selling stuff into Idaho, there's actually a threshold you have to meet before we require you to have a seller's permit. Idaho's threshold is $100,000, so it's you have to be doing quite a bit of business for it. But if you're located in Idaho and selling in Idaho, the permit process is all the same.
So, ladies and gentlemen, that was Gordon Myers. Do you want to take a moment and introduce yourself, Gordon, so people know who you are?
Sure. Like Steve said, I'm Gordon Myers. I'm the Customer Experience Coordinator, and part of that is that until recently, I was actually in charge of the call center and the help desk.
You're also a breadth of knowledge and a subject matter expert on all of these things, and we graciously appreciate you helping us with that, Gordon. Okay, so selling tangible personal property. Any sale of tangible personal property that you make in the state of Idaho is going to require you to collect sales tax, unless there's an exemption. There are a lot of exemptions, and we're going to discuss one of the more common ones here in just a second. But any sale of tangible personal property that you make in the state of Idaho is going to require you to collect sales tax. So if you are required to collect sales tax, you're also required to remit that to the state, which means you're going to need a permit to do so, right? So that's why we need to do this. So one of the exceptions that we're going to talk about is whether or not you're going to charge Idaho sales tax to goods to another state. There's some things that determine whether this is going to happen. You're going to charge Idaho sales tax if the buyer arranges shipping or if they pick up the goods in this state. You are not going to charge Idaho sales tax on goods that were delivered to another state by your company vehicle or by common carrier. So what's the difference here? The key difference is where the customer takes possession of that product. If you're delivering it or arranging shipping to another state, you or your agent still have possession of it until it reaches that final destination. The transfer of the property takes place in the other state, so you're not going to charge Idaho tax. You may have to charge tax based on that other state, but we're going to talk about that in just a second. Now, if the buyer comes to Idaho and picks up the goods, or if they arrange for the shipping, they took possession of the goods in Idaho, so that transaction is taxable in Idaho. And Idaho does not exempt buyers from non-taxing states. If they buy products in Idaho, they're subject to Idaho sales tax. So, like I said, if you're shipping goods to another state, then you need to research the state's threshold for sales taxes because it's not the same for every state. The Wayfair versus South Dakota decision several years ago allowed states to collect sales tax for items that were delivered into their states, but each state has different requirements. Some states, it may be the first dollar of sales. Another state, it may be you don't collect until you've reached a threshold of $1,000. It varies. So you're going to have to look to see which state is which. Okay? So a little bit of research needs to be done. The nice thing is if you're using a marketplace to sell your goods, check to see if they're collecting the tax, because most of them do. They collect it and remit it. And I have an email, so give me just 1 second here to see what's going on here. Like somebody's having trouble getting in. And I have some hold music going. Okay, there we go. Okay, so that's shipping. Any questions on that? So let's talk about your invoicing and your receipts. This is an important documentation piece, and it needs to be formatted correctly to basically protect you so that you can verify that you've collected the sales tax that you should have collected and then how much that tax was. So there's things you need to be aware of. Sales tax must be a separate line item on an invoice or receipt. Putting includes tax isn't acceptable. We want an actual number in there. And you can't advertise that you're going to pay tax for a customer or advertise that there's no sales tax. You want those numbers to be on that invoice or that receipt. Okay. So what do I mean by that? Let's just do a sample invoice. Could also be a receipt. For our purposes, they are the same thing. So this is a sample invoice for Awesome Auto Repair, and they did a brake job for somebody. So they had 2 brake pads at $50 a piece for a total of $100, and you'll see where it says taxable, there is a T there, indicating that this is taxable. And then brake shoes as well. There were 2 of those for $100 a piece for $200, and that is taxable. And then they charged a very reasonable $100 for labor. So the whole total was $400, but only $300 of that was taxable. So 300 times 6% is 18, so your total due is $418. You want it broken out like this. If you just did a $400 tax job or $400 brake job, you would be charging taxes on the entire amount. If you didn't break it out like this and just did brake job for $400, you would be charging $424. So you can actually save your customers a little bit of money if you break it out like this, if you have labor, things like that. Okay. So if you're buying for resale or wholesaling, or you're producing items for sale, or if you have a statutory exemption, you can buy your products exempt from sales tax using this form. It's called an ST-101. Now, you may also use or receive these forms from your customers, and if you do, you're not required to collect tax from them. So what this is, it's a form ST-101. It is available on our website at tax.idaho.gov, and if you do a search for forms, you'll find it there. And we're going to walk through how to fill this thing out. It has 4 pages of instructions, and they explain quite a few of the exemptions that are available here. There is also another version called an ST-103C, and it is for real property contractors. It's very specific to them, so you may or may not see that. And this one has just 1 page of instructions, and so the exemptions are very specific here. So just be aware that it's here. You're probably not going to see this, but you're going to see it in ST-101 at some point, or you're going to use one. If you use it, you can save yourself money. And we have another question. It says, what about sales tax on gift cards?
Sorry, had to find my unmute button. When you buy a gift card, you don't pay the sales tax on it, but when the person redeems it, they pay the tax on whatever it is they're purchasing. Does that make sense?
I'm going to go with yes. Okay. There we go.
There we go.
Thanks. Okay, so this is how we're going to fill out an ST-101. What I would recommend is that you go out to our website and you download one of these, because I want you to read it and be familiar with it, so that if somebody brings one to you, you know what to do with it, because there is nothing worse than having a busy Saturday afternoon where business is humming, and then somebody brings one of these things in and you've never seen it before. Or the person working the register has never seen it, so they don't know what to do with it. Everything grinds to a halt, it gets backed up, people get mad, people walk away. We don't want that. So download it, be familiar with it. If you have people who may see these things, show them this and make them familiar with it as well. Do a little bit of training. And then again, you might be able to use this. So when you buy products that you need to resell, you might be able to use this and save yourself some money. Okay? So for most buyers, you're going to fall into one of the first two categories on this page, whether it's a seller exemption or a producer or reseller exemption or a producer exemption. You only need to fill out one section. So even if you have a seller's permit and you're a producer, you don't need to fill out both sections. Just pick one. The first example, we're going to be buying items for resale, which means we'll fill out the first section of it. If you sell retail in Idaho, you need to include your seller's permit number, which you get from the Idaho Business Registration. And then sellers qualifying for other exemptions may not need that permit number, but for this one you do. It's pretty easy to fill out. You'd put in your name, address, city, state, and zip. The seller does the same. If we're doing section 1, we list the primary nature of our business in that little field, so you need to be succinct. Describe the products that you sell, your rent or lease, and then choose the box that applies. For most people, it's going to be an Idaho registered retailer. Check that box, you'll put in your permit number. And then you give this to the retailer. So please discuss submitting ST101s to various vendors.
That's coming up soon.
Must one register with a vendor, or can be submitted per purchase?
Generally speaking, you're only going to give it to the vendor one time and they'll keep it on file. It kind of depends on the vendor, because those forms don't actually come to us, they stay with the vendor. And most vendors who are accepting those have some sort of a system where you can give it to them once and they will keep you in their point of sale system. The one that I go to most of the time, they just ask for my phone number. When I give them that, they punch it in and they say, yeah, you've got a permit and you're exempt, and that takes care of it.
So as far as being the vendor, if you get these, that is a great way to do it, to assign them a number or use their phone number or something so you can pull them up. But I would take the invoices, the receipts that you've used, make a copy and attach it to this so you have something to back it up in case somebody comes asking. But yeah, you don't send this to anybody, but you will need to keep track of the sales that you had that were non-taxable. So Gordon, quick question for you. We're going to have a little colloquy here. Does a vendor have to accept these?
No, they do not. It's a little bit strange for them not to, because this actually relieves them of all liability. It didn't used to. It used to be that it was they could be held liable if they accepted one of these from somebody. But if it's been properly filled out, then it relieves the vendor of all liability for the tax that they didn't have to collect. And it goes back to whoever the buyer was, that's who we're going to collect it from.
Yep. Thank you. So if you're a producer, you don't need a seller's permit to get your exemption. You'll still need it if you're going to make sales. But this will allow you to purchase your supplies without paying tax on them. It doesn't apply to everything you buy, only to your supplies directly related to your business. So for a producer, we would go to section 2. You would put in there the nature of what you're producing and then check the boxes that apply. If you're using a producer exemption and you're farming, you're ranching, and you're mining, click all 3 if you want to. Okay. And then again, this goes to the vendor. The vendor hangs on to it as the reason they did this transaction as tax-free.
And Lisa asked, this is a form you'd use if you sell wholesale. Yeah, if you're selling wholesale, up there in that number 1 box that says buying for resale, there's actually a checkbox in there that says wholesale only. You're not making retail sales. And that is going to exempt you from having to do tax anyway, but this allows you to buy your product without getting stuck for tax on it. This is primarily the sales tax exemption certificate for the vast majority of people who are in business and needing to buy their product. There are a couple of others, though, as Steve will show you.
I will. I mean, I will. Okay, so let's talk about reporting. There's some important things you need to be aware of here. Sales tax is due in the reporting period that sale took place. You can't defer sales tax, and you're required to file a return even if you've had no sales. It's a $0 return, but you want to make sure that you file it because you don't want us to guess, right? So what do I mean by sales tax is due in the reporting period that it took place? I have a great example for this. Let's say you buy a cell phone, and then the company will usually let you take that phone and use it with no money down, and you just make payments along with your bill. However, you're still required to pay the tax before you leave with the phone. So if the tax on that phone happens to be $150 based on the value of the phone, you need to give them $150 before you leave. And that's because you took possession of that product at that time. You're still paying for it, but you do have to pay the tax first. You can't defer it. So how do we report this stuff? Well, we're going to use something called an 850. And these are things that are sent to you. Once you've registered and you have your permit numbers, you'll start getting these. Okay? These have your permit number on them, as you can see in the upper right-hand side. What reporting period this is for. In this case, it's from September 1st, 2023 to September 30th. And when this is due. And this one is due on the 21st of October. Now that due date, if you're sending it in via mail, and as long as it is postmarked by that due date, you're fine. However, I would use TAP, and you just file this thing electronically. You don't have to worry about it. You'll also notice that on the bottom, it has what appears to be like the numbers from a check. That's kind of what this is. These are the routing numbers for your account and where this is supposed to go and for what period. So don't use one of these things if it's blank. If you found you've lost this, and so you can't find it, so you found one online somewhere, or somebody else gave you one, don't use it because it has the wrong numbers on it or the missing numbers, and it's not going to go where you think it's going to go. And don't think that you can white out it and put a bunch of whiteout in there and then write your own numbers. This is all computer readable text. So if it's not readable, then it won't get processed. So if you lose one of these, or you can't find it, which happens, just go ahead and call us. The phone number is going to be at the end of this presentation. Just give us a call or go into your local field office. We can get it taken care of for you. Okay? So how do we fill one of these things out? It's pretty simple. If you have a tax accounting software, it's even more simple. So we're going to start with the right-hand side of this thing, and we're just going to walk through one. So the first thing we're going to do is we're going to enter the total taxable sales from that reporting period. So for September, we had $1,025 of total taxable sales. Any non-taxable sales, so sales that should have been taxable, but somebody gave us an ST-101.
Hey, Steve.
Yeah.
I got to make a real quick correction. Number one is not total taxable sales, it's total sales, because we're going to deduct out those that are non-taxable. Now, when we talk about sales, we are not talking about service fees and stuff like that. We're talking about the actual sales of merchandise, but this is the total amount. And it's the total amount for the entire business. It's not just your total amount for Idaho.
So non-taxable sales would be things that we received an ST-101 for. So you had somebody come in September and they purchased $50 worth of goods from you, and they gave you an ST-101. So you need to be able to back that out so that we can make sure that you don't get charged sales tax for that. We'll do our subtotal here, which now leaves us with $975. The next line are going to be items subject to use tax. Use tax can be very complicated. I'm going to greatly oversimplify it right here and just basically say use tax are things that you purchased that you should have paid sales tax on, but you did not. And so you would enter that here. So for our instance, let's say we bought a magazine subscription for $25. Tax wasn't collected on it, so we're going to add that $25 here. That's going to give us our new total, which is $1,000, which makes math easy. So we're going to figure out our tax on $1,000, and that is going to be $60. So that should be the $60 of sales tax that you've collected. And then we have adjustments. The next line, the adjustments occur, for example, when you've sold a product and you've collected tax on it. And then after you filed the taxes, the customer returned the item. So you've refunded them their money, including the sales tax, and you've also paid that tax to us. So now you've paid the tax and you've refunded it to the customer. So we allow you to claim that back right here on this line so you don't get double dipped. So you will need to have some documentation available. If you file electronically, just keep it with you. If you are mailing this in, you need to attach it. For this example, we don't have any adjustments in here. We carry it forward, so we're still looking at $60. Now, if you file late, penalty and interest may apply. We suggest that you file the return without including any P of I, and then let us calculate it for you. And it's because we have a tendency to round down, or some software has a tendency to round up. So if we haven't told you that you owe penalty and interest, don't include it here. If we have, then go ahead and include it right there. We would add these up, get our new total, and then this is what you remit. So when you have the final balance, you just send it along in the mail with the form to file your taxes. And again, remember, these are actual taxes that you've collected from the customers. So it's money that belongs to the state, and you're just giving it back.
Okay, Chris is asking if you paid sales tax on the product when you bought it and then also charged sales tax when the customer purchased it, you put the amount of sales tax you originally paid in the adjustments field? No, you don't. If you did that, you actually need to fill out a separate form called a Form TCR, which is to give you a tax refund, a sales tax refund. It takes a while to get that. And the first option that you really want to do is go back to the vendor that you bought that stuff from and paid tax on and let them know that it should have been exempt and ask them to refund you the tax. Some will, some won't. And if they don't, then you file the form with us and we'll refund it to you. But it doesn't go on this. It's not part of your, the sales tax you collected goes on this, but sales tax you paid is not part of this form.
It's a great question, though. Okay. Now we're going to cover a little bit about becoming an employer. Your business is growing. You're doing great. You can't keep up by yourself, so now you have to hire people. First of all, congratulations. That is it's a big step for business. When you're hiring people, you need to make sure you're aware of the employee versus independent contractor classifications. You may be tempted to classify your employees as independent contractors because you're not required to withhold payroll taxes for independent contractors. But be aware that there are specific criteria for each. The IRS has guidelines for who's an employee and who's a contractor. In most cases, you're going to have employees, which means that you'll need to withhold taxes for them. So this is just some of them. Luis is going to go through this in pretty good detail. But if you look at this, if their hours are set by you, then they're probably an employee. If they're part of the hour of the week of the month, if they work for one firm, if regular reports are required, all of this stuff, if you say yes to these things, then they're probably an employee and you need to classify them as such, okay? Which means that you'll need to do withholding for them. So income tax withholding. Income tax withholding shouldn't be confused with your business's income taxes. It isn't your money, it's money the employee earned, but you're sending part of it to the state and to the IRS on their behalf. so that they don't have a huge tax bill at the end of the year. So what do you need with a withholding account? If you have one or more full-time or part-time employees working in Idaho, you need to get a withholding account. And you would need to get your withholding account established before you hire your employees. And remember, it can take several weeks to actually get that permit. So it involves a little bit of planning. If you know that you're going to start hiring employees, go out to the IBR, fill out the form. Again, make sure you get your withholding permit number so that you're ready for this when you start doing it. So what do you need to withhold on? Well, wages. All wage and income is subject to Idaho income tax if the employee earned that income while they're working in Idaho. And this includes employees who aren't Idaho residents, employees who are family members, people working only one day in Idaho, so like Elton John, and people who aren't citizens of the United States unless they're exempt from federal withholding. Is this deck on the website? Lisa, it's available for download from the WebEx that I sent you. When you click on the link and scroll down, you should have that material available there. If you can't find it or you can't get to it, go ahead and send me an email at taxtraining@tax.idaho.gov, okay? And that email address is in the chat at the top. So it's not just wages, it's also wages paid in kind that you're going to need to withhold on. And these are wages that you pay an employee in something other than money. So things like goods, lodging, food, clothing, personal use of a company vehicle. Generally speaking, you have to withhold Idaho income tax on the fair market value of such payments when you make them for services employees provided in Idaho. An exception to this is that you don't have to withhold Idaho income tax for food or lodging provided for the employer's convenience if that food or lodging qualifies for an exclusion from wages under federal law. So if you bought the guy's lunch, something like that, you don't have to withhold on the value of the pizza party. Additionally, supplemental wages. So supplemental wages are things like bonuses, severance pay, any awards or prizes, overtime, if you're paying out accumulated sick leave, things like that. You need to withhold on those as well. Things you don't have to withhold on. You still have to have a withholding count and you still need to report your payroll, but you don't have to withhold Idaho income tax if the employee isn't a resident of Idaho and they've earned less than $1,000 in Idaho in a calendar year. Or if you employ an agricultural laborer who earns less than $1,000 in a calendar year, or if the employee is exempt from federal withholding. In a little more detail, if you have an employee who is an enrolled member of a federally recognized American Indian tribe, they earn their income on a reservation, and they live on a reservation, you don't have to withhold. It does not all need to be the same reservation. Additionally, if you have an employee who gives you an IDW-4 stating that they are exempt from withholding because they didn't owe Idaho income tax in the previous year, and they don't expect to owe for this year, you don't have to withhold. And that's just as a note, this exemption is only good for the current year, so they have to do this with a new form every year. So my question to you, let's say you have an employee that thinks they're going to be clever and they're going to say, hey, I'm going to be exempt, I don't plan on owing anything. Knowing that that means you're not going to withhold any taxes, so they get all of it. And then at the end of the year, it turns out that they're not exempt, and now they have a very large tax bill on the 15th that they need to pay. What does this have? Are you in trouble because you didn't withhold anything? That's my question to you. What do you think? And you didn't know there'd be a quiz, did you? Anybody have an idea? If somebody tells you they're exempt and they fill out the W-4 stating that, and it turns out they're not exempt, are you in trouble for not doing any withholding? Everybody is shy. Exactly. Nope, you are not. This is a choice that they made. You're just doing what they told you. You have the paper, you're fine.
We're going to throw another caveat into that, though. You're only safe on the first year. If they try and do it again the second year and you accept it with the exempted, then you could actually be in a little bit of trouble too.
So make sure you keep your paperwork. We're going to talk about the paperwork here in a little bit. Okay. I can't believe somebody would try it again. Well, they might.
Yeah, well, especially with the amount that they're going to end up having to pay on it, because there's some pretty good penalties that go along with that besides the taxes.
Okay, so more about employees. You're going to need to report your new hires. You need to do it within 20 days of hiring. You're going to need to do that at labor.idaho.gov. And you need to have each employee fill out an I-9. If you're not sure, that I-9 is just, it's a required form that shows that the employee is legally allowed to work in the United States. If you need more information about this, it is on uscis.gov. And then federal and state W-4 forms. The IRS and the state each have their own W-4s. I remember when it used to be just one and everybody was happy, but now everybody has their own. And these numbers are going to be likely to be different. So when you're having employees fill these out, make sure that they follow the instructions. Filling out the forms incorrectly may result in too little being withheld, but then the employee has a large amount of tax that they have to owe when they file. As someone who has done this when I was younger, and I wasn't completely sure what I was doing, so I just filled it out with a bunch of numbers. And it turns out that they didn't withhold anywhere near enough. I figured out at the end of the year that I needed to come up with a whole lot of money because the business didn't withhold what they should have been withholding if I had filled this out correctly. It was totally on me, but it was a learning experience. So to get these forms from the IRS, if you go to irs.gov and look for forms and instructions, it's usually right at the top. It's a Form W-4. For Idaho, we're going to go to tax.idaho.gov, and under individual, because this is what we're talking about now, we're talking about the individual's withholding, we're going to go to income tax forms. If you go there, you should see right towards the top under forms and publications, the Form ID W-4, which is the Idaho W-4. And right now we have the federal form in there as well. I can't guarantee that that's always going to be there that way, but right now they're both listed there. So you can just download both of them and have them fill out both. Now when they're filling these things out, make sure that they're reading all of the instructions so that they don't mess this up. Okay? Because messing it up comes with a big shock at the end of the year. So this is the part that the employer should give you for your records. This form isn't sent to the state or to the IRS. You're just using it so that when you're preparing your payroll, you know how much to withhold. And then you'll keep it for your records. And the instructions start at the top of this page and then they go to the back, so make sure that they have all of it. There's some other Idaho reporting forms you need to be aware of. There is the 910, which is the payment voucher. And depending on your volume, you may be required to file more or less frequently than monthly. So you could do monthly, quarterly, that kind of thing. The due date will actually show on the filing form itself. And then again, remember, you're required to file even if there's 0 to report. Again, you want to make sure that you're filing so that we don't guess. Okay? So if it's a monthly filer, it's due on the 20th of the following month. If you happen to be a quarterly filer, it's due on the last day of the following month. And again, for no withholding, make sure that you file even if you have $0 to report. This is what the 910 looks like. Pretty similar to the 850 that we just walked through. It's not available online again. If you need a replacement, please call us. Don't use a form from a different period or from a different company because it will not go where it's supposed to. And just like the 850, we have our permit number there. We have what period this is for. We have when it is due. We have the payment amount, and this is the entire withholding that you're submitting. It's not per employee, so it's everything for all employees that you've gathered for that particular period. Okay. And then we have all of the routing numbers. Questions on this? Okay. We have more forms. We have the 967, which is the Idaho Annual Withholding Report. This is due on January 31st. And what it does is that it reconciles your Idaho income tax withholding on your W-2 forms with the 910 that we just looked at. It also serves as the cover sheet for the state copies of the W-2. And this is what that form looks like. If you have accounting software, they can just generate this. I cannot emphasize enough the importance of having a good quality accounting software. I can't tell you what kind to get. There's a lot of them out there. But this is going to be kind of the backbone of your reporting, so get a good one, right? So this is the W-2. The W-2 is a document that you're going to give your employees so that they can complete their tax returns. So 967s and the W-2s can all be filed electronically by uploading something called an EFW2 file, which is going to be generated by your computer software, if you have it. Now, if you end up with more than 50 employees, you're required to file those electronically with us and the IRS. So at that point, you're pretty much going to have accounting software. And then the highlighted portions is just the parts that the state is looking at here for the W-2. So a quick summary of what we talked about for withholding. Make sure that you're classifying your employees and your independent contractors correctly. Make sure that you're reporting your employment to the Idaho Department of Labor. Make sure that you have employees filling out I-9s and W-4s. Make sure you have a withholding account before you hire your employees. And then your 910 works with a withholding account to send in the state income taxes that you withheld. And the 967 is the annual form with the W-2s to report yearly to the state. Any questions on that? Okay, let's talk about e-filing. You can file your Form 850s, your 910s, and your 967s electronically and free of charge. Now, if you have 50 or more employees working in Idaho, you have to submit W-2s and 967s electronically. You can't file individual and business income taxes using TAP, but there's a lot of stuff you can do in TAP. So it's a taxpayer access portal. So there's where we're going next. We're going to TAP. So we recommend that you set up a TAP account as soon as you get your permits. You can't do it beforehand, but as soon as you get those permits, I would set up that TAP account. And because we have some security procedures that do take some time, I would expect a couple of weeks or more before you can actually complete the TAP section. But what you'll do is you'll go in here to TaxIdahogov, click on TAP, and then start the process of creating your account. So once you have that, when you're ready to do your reporting or your filing, come to tax.idaho.gov, click on TAP, and then here's what you can do in there. You can file your sales and use taxes that we just talked about. If you have travel and convention taxes you need to file, or auditorium district taxes, you can file those there. The withholding taxes we just talked about. If you have any IFTA reports you need to submit, you can do those there, or beer and wine taxes. All of those can be done in TAP. You don't have to find an envelope, find a stamp, get to the post office, make sure it's bookmarked in time. You can just, from your computer and your laptop, go here, click there, file them. There you go. One and done, and then you can move on. You can also make payments. So if you need to make payments for sales and use taxes, or travel and convention taxes, or those auditorium district taxes, withholding, if you need to make payments for individual income taxes, you can do so in TAP. Your business income taxes, you can make payments. If you need to make payments for beer and wine taxes, you can do so. TAP is also where you would go to validate permits. So if you are submitting an ST-101, to buy some products tax-free, you need to make sure that the permit number that you're putting in there is correct, and so that would be yours. So you would validate that through the seller's permit part of TAP. You don't actually have an account to do that.
Okay, question is, I filed online, but they wanted the worksheet. What kind of taxes were you filing that we needed the worksheet on? Okay, so it's sales tax. Yes, we need to have the form, but you can actually fill out the form on TAP as well. It's not just making the payment. There is a electronic facsimile of the form that you get to fill out, and we need to have that as part of the process for sales tax. For withholding tax, it's a little bit different because there's only one number on it to show the amount that you're paying. So when you file a form, it's just going to say, well, do you want to pay it too, and it takes care of it. By the way, when you're filing withholding tax, fill out the form, file the return before you make the payment, or else it's going to ask for it again. But yes, we do have to have the Form 850 for sales tax either done on TAP or sent through the mail.
Cool, thanks. So there are some limitations to TAP. I love it. I think it's super helpful, and it makes life so much easier and saves a ton of time. But there's some things it can't do. You can't apply for a permit, but we all know where to go for that, right? We go to the IBR if we need to apply for a permit. We wouldn't do that in TAP. You can't amend a return, and you can't file income taxes through TAP. Is there a specific link to that 850 form?
Well, the first thing is you have to have the TAP account. Once you have a TAP account set up, you will see your sales tax account there. And when you go to that sales tax account and there's a link that says file your return, it brings up that form. You cannot get the 850 form online. We have to either mail it to you or you have to go into TAP and fill out the
online form.
The online version of the form there. So yeah, once you go into your TAP account and you see that sales tax account, open that up and there'll be a link that says file returns. There's several links there, make a payment, some of that kind of stuff. But just make sure you do the file return part of it as well as making the payment.
Thanks, Gordon. Okay, let's talk about income taxes. So far, we've discussed topics that relate mostly to the Idaho State Tax Commission. And so questions about those topics can be directed towards us, and I'm going to have the contact information on the last slide for you. There are a few items that are of importance to business owners that are from the IRS, and I'm going to cover some of those with this information. But we have first a question. Discuss the local option tax based on where the business is located or where work is performed. That is a great question.
Local option taxes are typically a sales tax, so it's based on where the sale takes place. And the thing is, we don't administer any of the local option taxes. So if you go to Sun Valley, the tax structure there may be totally different than what it is in McCall. Each locality gets to set it up their own way. And every one of those places, there are some things that are taxed and some things that aren't. Typically local option taxes, because they are restricted to what the legislature has defined as resort cities. It's typically going to be things like hotel, motel tax, liquor by the drink, sometimes restaurant food, the things that the tourist is most likely to be spending money on that is going to be taxed the heaviest. But in some places, they even tax like building materials with a local option tax. So basically, you just need to check with the locality where you're making the sales. And I've tried to keep track of those things, and there are just too many of them. They change them all the time.
Yeah. Okay. So first thing we need to be aware of is the self-employment tax. If you're self-employed, this tax includes FICA, Social Security, and Medicare. You have to pay this on your own if you're self-employed. Even if you're starting a business as a side business, this needs to be paid. Typically, when you're employed by another person, then these are usually split between the employee and the employer. As someone who is self-employed, you need to pay this full percentage. And it's recommended that you set aside at least 15.3% of your net profit to make sure that you have enough money to cover this. This is often paid quarterly along with your estimated federal taxes. And this is through the IRS, not through Idaho. So if you need more information about this, go see irs.gov. Okay? That just breaks it down a little more. So when you're self-employed, you pay both parts. Payroll tax is due in the first dollar of your profit. For sole proprietor, there is no standard deduction applied, and it is 15.3%. And it's not the same as your income tax, but you're going to report and you're going to pay your payroll tax with your federal taxes. More info on the local option taxes.
Again, we don't administer those. We don't have the information, and they don't have to give us any information on it. We have links to each locality that has a local option tax on the website, but because we don't have any of the administration part of it, we don't have all of it. The one thing that we do have is auditorium and I'm trying to remember what they call it, auditorium district taxes. Anyway, there are 3 of those in the state. We do administer those, but that's really the only local taxes that we get involved in.
Is there any way I can get all this? You mean the handouts that we're going over, Janet? If you're talking about the handouts, the slides and whatnot, yeah, if you go to the WebEx and you can download this material, it's available there. Or if you send me an email at taxtraining@tax.idaho.gov, that way I know what email address you want me to send it to. I can reply back to you with PDF versions of this stuff. Okay. And also, this is going to be recorded and it's going to be posted on YouTube when we get done processing it. So you'll be able to refer back to it as well. Okay. There's a lot of taxes. Let's talk about saving money. Let's do that. So the IRS states that all deductible business expenses must be incurred with connection with your trade, your business, or your profession. They must be ordinary and they must be necessary, and they must not be lavish or extravagant under the circumstances. But if you have deductible business expenses that you can use them. It will save you money, and we want you to do that. Brian's question, any filing differences when your business is on Etsy, considering they collect all taxes and you get a 1099 at the end of the year?
For income tax purposes, which is where we're at now, you're just going to claim that 1099 income on your Schedule C. For the sales tax side of that, as long as they're collecting all the taxes, you actually don't need to have a seller's permit unless you're using that so you can buy your materials wholesale or something like that. And for Etsy, you're probably able to claim a production exemption because you're buying raw materials and creating something to sell on Etsy. Not really any differences. The one thing to remember is if you do have a permit, then you have to file even if it's zeros. And if Etsy is collecting all your taxes, it's probably going to be zeros.
These are great questions.
Yeah, they are. And you know what? I've had very few of them that I've had to start out with, it depends.
I know.
That's my normal first response.
Yeah, it depends. Okay, so there's different forms for reporting your business expenses as tax deductions. And it's important to do your research to verify which form is going to match your business. Normally, sole proprietors are going to report their taxes on their personal returns, while other business types are going to file a separate return. So many sole proprietors are going to use the Schedule C. So this is that Federal Form 1040 Schedule C. If this is appropriate for your business, this is going to show you Part 2 of that form. And it'll show you all the different types of business expenses that you can report with this form. If there's other forms that you need to use, they may look similar, but they're going to have a different layout. I would research this thoroughly and make sure that you're using all of these that you can. These will save you money. And who doesn't want to do that? Now, don't run rampant and think that, you know, I'm a baker and I'm going to have a cupcake delivery business. And because I've been talking to Irene and she's told me that it would be really good to have a specific thing, a niche that I can do, I'm going to buy a Lamborghini and I'm going to use it as a delivery vehicle. Because I'm using it with my business, I'll be able to deduct it, right? Well, remember that first part where it can't be lavish or extravagant? Pretty sure the Lamborghini is going to fall into that. But maybe a Ford Ranger? Maybe that would work. But yeah, do some research and make sure that you can use the things, all right? Okay, record keeping. You want to keep your records for at least 4 years. Tax agencies like Idaho and the IRS can normally audit back 3 years from the current year. However, if you've been doing business without permits, and you know who you are, we can go back 7 years. So keep that in mind. So make sure you're keeping records. Okay? So things like your receipts, your check registers, invoices for sales and purchases, tax returns. Make sure you're keeping these for at least 4 years. Some stuff you're going to want to keep more than 4 years. So all of your payroll records. Any contracts, I would keep those contracts until 4 years after the close of that contract. Those exemption certificates, the ST 101s that we talked about, and the 103Cs if you get them, I would keep those until they're revoked. They don't expire. So until the person who gives you that contacts you and says, hey, I'm revoking this, usually it's I'm revoking this and I'm giving you a new one, hang on to it. And then for your payroll records, here's what those should contain. Name, address, and social security number of the person, the dates of their employment, the wages and the taxes that were withheld, the hours and work location, and then any relevant forms. So W-4s, W-2s, 1099s, I-9s, all that stuff. Keep it for at least 4 years. So does this mean that you need to have multiple filing cabinets full of paper? No. As long as you can pull it up if somebody's asking questions, you're fine. It can all be electronic. You just need to be able to find it. So some organization will be helpful. Any questions on the record keeping? Okay. So I'm wrapping up for my part. There's a lot of ways that you can get in touch with us. We're on Facebook. We're on, I guess, X now. I need to change that. Instagram. We're in LinkedIn. So if you know anybody who's looking for a job and they would like to work for the tax commission, have them go to LinkedIn. We have a lot of our jobs posted there. Also on DHR. We're on YouTube at Idaho State Tax on YouTube. This is where this will be posted once I've got it completed. But Gordon and I also do a lot of other videos called Tuesday Tax Facts. So things like, I've missed my filing deadline, what do I do? How do I check on the status of my refund? Things like that are all posted out there. They're really quick, like 2 to 3 minute videos that walk you through how to do things. We also have a newsletter. It's tax.idaho.gov/get-news. All right, I'll work on it, Elaine, I'm sorry. And more importantly, we have direct contact information here. So you can call us in the Boise area at 208-334-7660 or toll free at 1-800-972-7660. You can also visit us on our website that we've looked at a few times today at tax.idaho.gov, or you can email us at taxrep@tax.idaho.gov. And we also have a fax machine. It's 208-334-7846. Any questions? Okay, so what we're going to take a couple of minutes here, get some coffee, maybe a little bio break, and then when we come back, we'll have Luis from the Idaho Industrial Commission has some really good information for you. So let's do that. It is 10:05. Let's be back at 10:10. Okay, so that's 5 minutes, and then we'll start again. All right. Thanks. Okay, welcome back, everybody. It's 10 after. Let me get Luis in here.
Hi, Steve. Can you hear me?
Yes, sir, I can.
Awesome. Perfect. I was worried we were going to have the same problem like last week.
No, sounds like we're good right now.
Perfect. All right, so I'll go ahead and I'll start then.
Okay, perfect.
Hi, everybody. Thank you first and foremost for having me, and thanks, Steve, for having me as well, too. My name's Luis Estrada. I work with the State of Idaho's Industrial Commission Department. We're the state agency that oversees the workers' compensation side of Idaho. And today we'll be talking some facts for employers, specifically covering that worker compensation insurance law. So the PowerPoint will be broken down into 4 sections. The first one's going to talk about an overview of workers' compensation. So we'll talk a little bit about the Industrial Commission in general, the different departments within the Industrial Commission, workers' compensation insurance, and who needs workers' compensation insurance. The second section will talk about the relevant laws and compliance processes. We'll go briefly over some of the laws, if not we'd be here all day. We'll also talk about the requirements for obtaining coverage, penalties if you are non-compliant, and the cost and how to obtain it. Then we'll move over to Section 3, which will talk about the exemptions. We'll review about the different types of employments that are considered exempt by the law, and then the processes for determining those exemptions, no certificates of exemption, and then the application of the law. And then we'll wrap up with Section 4, which will talk about independent contractors versus employees. We'll talk about the applicable statute, the right to control test, some common misconceptions, and some cost of misclassifications. So workers' compensation insurance law, the underlying principle behind workers' compensation law is the existence of an employer-employee relationship. In other words, in Idaho, the work comp laws don't come into effect until we've established that employee-employer relationship. So if you're an employer, you hire an employee. If you're hiring an employee, then that's when that work comp law comes into play. As I mentioned, the Idaho Industrial Commission is the state agency that is responsible for administering Idaho's work comp insurance laws. We monitor and audit claims of injured workers and also conduct judicial proceedings over disputed claims. And breaking down the Industrial Commission, there are different departments. I'm assigned to the Employer Compliance Department, and what we do is we work to ensure that coverage is secured by the employer. That way, every employee that they have is covered in case a claim comes in. If there's no policy, if there's a policy in place, it helps protect both the employee and the employer. And I'll expand on that a little bit later on in the PowerPoint presentation. Aside from the Employer Compliance Department, we also have our rehab division. They work mostly with, they work with the employer, the employee, the injured worker in this case, any medical doctors, and then any other party involved, including the insurance carrier themselves, on helping facilitate that rehab injury and getting the injured worker back to work, preferably in the position that they were in at the time of the injury. We also have our legal department. They handle all the court proceedings. We also have our benefits department. They handle any issues that you or an injured worker may have in terms of, for example, if a injured worker is not receiving their payments from the insurance company, benefits would be the ones who would handle those type of claims. We also have our crime victims division that helps any victims that were, any individuals that were victims of crimes related to work comp in this specific case. It's a pretty big agency overall, the Industrial Commission is. So workers' compensation insurance is a no-fault insurance which provides wage loss and medical benefits to workers with a job-related injury or disease. And as I mentioned, it protects employers and it protects the employers from certain civil liabilities. And all that comes down to a agreement that was reached between employees and employers. And that agreement is basically stating that the employer would obtain a work comp policy to cover their employees in case of workplace injuries, and in return the employees will file the claim through the insurance company or the work comp policy, and resort from having to file lawsuits directly against the employer. Now, however, keep in mind that doesn't completely protect you from all civil liabilities, just a good chunk of them. So who ultimately needs a work comp policy? Any employer that has one or more full-time, part-time, seasonal, or occasional employees, as well as any employer that might have employees working remotely from their home in Idaho, would be required to carry a work comp policy unless specifically exempted by law. And those exemptions, as I mentioned, we'll cover that in section 3 of this PowerPoint. So what happens if you have an employee that does not want to be covered by a work comp policy? Unfortunately, here in Idaho, that's not an option, and we call that an invalid agreement. So if an employee is working for you, if you have an employee working for you, unless they're specifically exempt by work comp coverage, you are required to carry that work comp policy for them. And you can't deduct any of the portion of the cost from their wages. That's actually illegal. Ultimately, it's the responsibility of the employer to obtain that policy and keep it active as long as they have employees. So the workers' compensation laws here in Idaho are pretty extensive, but here are some of the more commonly frequent ones that we run into. So 72-209 and 211. It's going to talk about the responsibilities of employers to carry work comp policy and the rights of employees to be covered by work comp policy. 72-301 is your security of payment of compensation. So you as an employer can satisfy the insurance requirement in one of two ways. The first one is the most common way, which is to obtain a work comp policy from an authorized carrier. You'll hear the term carrier, surety, insurance company. It's interchangeable terminology, and what we're referring to that is just an insurance company. So if you ever hear us, if you talk to us, you might hear us say, what surety are you going through? We're just referring to what insurance company you're going through, basically. But you can obtain a work comp policy through any surety that's able to write a policy in Idaho, and there's actually a list. I believe there's over 380 of them, last time I checked, sureties that can write policies in Idaho, and you can find that on our website. If you just Google Idaho Industrial Commission, it'll take you straight to our website. And that process, you can contact any insurance agent. It could be your homeowner's insurance agent, automotive insurance agent. They'll guide you on the application process. They may not be able to get the application going for you, but they can guide you to the best insurance agent they can find for that. And once the surety issues you a work comp policy, the surety themselves are required technically to submit the policy electronically to a database that the state of Idaho requires in order for us to officially verify the policy and accept it as proof of coverage. And that database is the National Council on Compensation Insurance database, or NCCI for short. So that is one requirement that the state of Idaho requests all insurance companies that they submit the policies to NCCI. Once that policy has been submitted to NCCI in turn sends it over to us electronically, normally 1 to 2 business days upon receiving the policy themselves. They'll send it over to us, and pending everything's correct on the policy, so the legal entity name, the legal status, mailing address, email address, etc., FEIN, if that's all correct, then we accept that as proof of coverage. The other option is to become self-insured. And that one's a little bit more tedious because it has different requirements, such as it needs to be approved by the commission itself, and then you also need to have a pretty high amount of quarterly payroll. So that tends to be exclusive to very, very, very large employers, and not as common option either. And so what happens if you happen to not obtain a work comp policy and you have employees? Well, you would be, you could be issued penalties, and it is technically a misdemeanor, and that falls under the statute 72-319, penalty for failure to secure compensation. And the penalty, you could be issued penalties either at a rate of $2 per employee per day that they're hired by you. So if you, for example, have an employee and they only work 5 days out of the 7-day week, we still include those 2 days off that they're off for the week, and that's because they're technically still employed by you and they could be called into work, so you're not firing the employee at the end of that work week and then rehiring them again at the start of the next work week. Or the other amount is $25 per day, whichever one's greater. So the rule of thumb is if you have 13 employees or more, you're probably looking at that $2 per employee per day, because that comes out at a higher amount than the $25 per day. And then the last statute we're going to quickly cover is 72-311, Notice of Security. That statute basically states that all policies, whether they're new policies, renewals, or cancellations, must be filed with the Industrial Commission, and that is filed through the NCCI database. Oh, and I forgot to mention that once they issue the work comp policy, the surety, you don't technically go in and send the policy over to NCCI. The surety does that for you. Coverage options. So the cost of insurance is actually going to be based on different factors. For example, they're based on payroll and also the type of business or work that's being performed. So as an example, office employees classified under 8810 on average is about 21 cents for every $100 in payroll, versus iron or steel construction workers that work under 2 stories classified under 5059, you're looking at $19.24 for every $100 in payroll. Again, keep in mind that those numbers aren't set in stone. Those are going to vary by the surety, the type of work, and the payroll. But as I mentioned, you can obtain work comp coverage through any of the 300 plus authorized carriers able to write policies in Idaho. Just contact any insurance agent, and that list of carriers is located, sorry, I can't talk today. It's located on our website, iic.idaho.gov. And one of the most commonly used sureties is the State Insurance Fund, or formerly known as the Idaho State Insurance Fund. They are a private carrier. They're not a state agency, so we do get that confusion quite frequently. The good thing about them is you can either contact them directly or contact them via an insurance agent, but they do write about 70% of all Idaho policies and mostly work with small businesses. If you are denied coverage by 2 separate insurance carriers, you can then apply for a assigned risk pool, which is meant for employers that can't secure coverage from private carriers. However, there is a 60% surcharge, and this assigned risk pool is actually ran through the NCCI themselves, so you can actually find that on their website. And same process, you can just let your insurance agent know, hey, I've been denied already a couple times, can we go through the assigned risk pool? And I do see a question here.
Yeah, Ryan's got a question. My risk code is a very high rate. No code really matches the type of work I do. Is there a process to adjust?
Sure. Ryan, that's a good question. So I would recommend you speaking to a insurance agent, because we don't really, the Industrial Commission doesn't really handle the adjusting the different types of risk codes for you. That would be based on the insurance carriers themselves. So that's my suggestion, is speak to your insurance agent and see if there's a different risk code that they can put your business under, and hopefully give you a little bit of a better rate at that point. Very good question, though. Title 72-212, so this is going to be the exemptions of coverage. The exemptions themselves are specifically listed in this statute. However, keep in mind that the state of Idaho doesn't issue exemption certificates or certificates of exemption. We, upon making the determination that your employees are exempt from work comp coverage, we just notate that in our database for future reference. So those exemptions are going to vary based on the way that your business is structured. So for example, if it's a LLC or a limited liability company, any working member of the LLC that has legitimate ownership in, and it can't be a name only, would be considered exempt from a work comp policy. And what we mean by have legitimate ownership and not being a member in name only is we need to see something in writing showing us the ownership, which leads to my next point. So we normally check this information via the Idaho Secretary of State database. And we are aware that you're not required to list every owner on your annual reportings. However, it is a good habit to do so, for one of the reasons being that if we ever run into a situation where one of those LLC members, in this case, is receiving wages on the Department of Labor and we can't locate a work comp policy, it makes it easier for us to be able to just go onto the Secretary of State database and locate that annual reporting and see that they're all listed on there and help us make a determination on, yep, they're exempt from work comp coverage in this case. And partnerships is the same thing. You have to be a working member of the partnership and have legitimate ownership. Can't be a partner in name only. And then sole proprietors, or your DBAs, doing business as, any sole proprietor and employment of certain family members that are living in the same household would be considered exempt. And those certain family members is normally your direct lineage. So for example, if your spouse, your children, your spouse's children legally adopted, if they're not your actual children, birth children, their spouses and then grandchildren, as well as your parents, would be considered exempt if they're living in the same household. Unfortunately, brothers, sisters, cousins, nieces, nephews, aunts, uncles wouldn't fall under that exemption. And also adding to that is if you have a LLC business and it's a single member LLC, so if you're the only LLC member and you tax it as a sole proprietor, those same exemptions for a sole prop would actually be applicable to that specific example on that single member LLC tax as a sole proprietor. But that's the big key thing on that, is it has to be a single member LLC taxed as a sole proprietor. There is also another and if scenario added to the sole prop, and that is if you have, for example, if you have a business, right, and it's a sole prop, and your son or daughter who normally works for you during the summer, and at the end of the summer they're actually off to college. However, they're still working here in Idaho, but in their college dorm, right? They're considered an employee. You can actually file a form that's called the IC-53 form, which basically states that you have a family member and you fall under that sole proprietorship business and they're working for you in Idaho. However, they're not living at home with you, and you're excluding or you're exempting that employee from work comp coverage. Keep in mind though, that's only applicable to sole props, so unfortunately it won't be applicable to a single member LLC tax as a sole proprietorship. And that form has to be signed by both the employee and the business owner and sent over to the Industrial Commission. And you can find that form on our website as well. So there's a lot of bit of and/if scenarios, and/or scenarios for sole props. So corporations, if you're a corporate officer and you own at least 10% of the business stock, and if there's a board of directors, be an active board member, you would be considered exempt from the work comp policy. So again, corporate officer, have at least 10% of business stock. If there's no board of directors, we disregard that part. We just then look at the other two parts of the requirement. And some other exemptions are going to be your household domestic services. So this is normally if, for example, if you have a elderly parent that needs domestic household care service, and you hire somebody to come in and take care of them, the work has to be performed mostly on the premises of that individual, so that your parents' house, right, taking care of them, feeding them, making the food, etc. And it has to be related to the actual household domestic service itself. So they can't be out there doing their lawn work and essentially not taking care of them. We are aware that they may need to go to, for example, the store and restock the groceries. That's perfectly fine. That's part of the taking care of the individual. And in terms of payment, they actually have to be paid from a personal account. So it can't be, for example, a business issuing a check to that household domestic service worker. It has to come from an individual account, personal account. casual employment, this is going to be employment that is not on a consistent basis and not directly related to the day-to-day operations of the business. So, for example, the example I like to use is a small mom-and-pop restaurant that during the winter time, or the holidays, they like to hire somebody to come in and paint little holiday decals on their windows. So that specific individual would be considered exempt from under the casual employment, because that work that they're doing is not on a consistent basis, right? And it's also not directly related to the day-to-day operations of the restaurant in this case. Employment of outworkers is similar to casual employment. The difference is that you need a product, or you need a product complete, but you can't get to it at the moment, so you outsource it to somebody. You provide them the product that they need to be able to complete this one-time project. They complete it for you, and then they return it to you completed, and then you can fulfill your obligations at that point. The example I like to use is a small boutique shop that likes to sell homemade, for example, dresses, clothing. And let's say you have an order come in that needs to be completed over the weekend to be turned in by the following week, Monday. However, you're out on vacation that weekend, and so you have to fulfill this order. So you decide that you have all the material there, the fabric, and you decide to outsource it to a seamstress who will get it done for you, get the dress made, and then they'll return the finished product to you, which then at that point you can then turn it in and fulfill your obligation for the sale itself. That's considered a employment of outworkers. So it's, you're outsourcing it on essentially a one-time basis. Volunteer ski patrols and official athletic contests, that's pretty self-explanatory. So independent contractors or employees, specifically employee misclassification. Whether someone who works for you as an employee or an independent contractor is a very important distinction, though it can be tempting to try to save some money by classifying your workers as independent contractors. Misclassifying can actually have pretty serious financial and legal consequences. So please know the difference. And Steve did a good job on showing a brief overview of what we look at when trying to determine who's an independent contractor versus an employee. However, I'm going to expand on that a little bit more. But an independent contractor is normally a person who provides goods and services to another entity, normally under terms that are specified in a contract. However, we're aware that not always is going to be the case. Generally speaking, though, independent contractors get to retain control over their schedules, the number of hours they're working, the jobs they accept, the job performance itself, and ultimately how the job is completed. Whereas employees, they work under a schedule that's required by their employer, and their performance is usually directly supervised by their employer. Essentially, it comes down to who's controlling this individual's workday, right? Independent contractors, when you think of, for example, if you want to do a remodel in your house, right? Let's say a bathroom remodel, you might buy, for example, the tile, right? But ultimately, you might not have the time or the experience to do it, so you're going to hire an independent contractor who will come in. They'll essentially have full control over the job itself, right? Their own performance. They're not having to check in with you on, hey, am I doing this right, etc. Obviously, understand that they can't set their own hours because they can't come in at 3 in the morning, or more likely probably shouldn't come in at 3 in the morning to do the job. So they'll have to accommodate to reasonable times. And you're not providing them training. They're experts in their field. You're also not providing them the tools that they need to complete the equipment. You may provide them, for example, the tile that you may want installed, but overall you're not providing them all the tools and the equipment that they need to do the job. Whereas employees such as myself, I'm given a schedule that I by my employer on what days I need to come in, what times I need to be here by, what time is my shift ending. I have to provide periodic updates on my work to my supervisors. They're consistently reviewing my work, right? And they're also providing me the tools and equipment I need to do my job. So they're providing me the office space, the computer, the software, the work cell phone, etc. That's stuff that would be classified under an employee-employer relationship. So if we have a case where we have an employer that is under the impression that their workers are independent contractors, we perform what is called a right to control test, and a worker status is determined based on this right to control test that composed of 4 main criteria, so 4 pillars. And considerably speaking, these factors do distinguish. I can't read today. These factors distinguish an employer from an independent contractor. However, this approach doesn't prioritize any one of those 4 criteria, nor specifies the minimum number that must be met. We take it case by case, and in cases where we just can't make that determination, the Idaho Supreme Court has given us direction to resolve in favor of finding the worker as an employee, and that's more of a safety net, right? So it's better to have a work comp policy in place and deal with it that way than not have and take the risk and not have the work comp policy in place and be looking at some legal consequences. And I do want to add that in Idaho there is no safety net, so if there's no work comp policy in place, the only other recourse that the employee has is to file a lawsuit against the employer, which again goes back to that trade-off that I'd mentioned earlier. And we do have a question. Jennifer is asking, do we do it for child employees that live in our own home or close by that are working for your LLC? Yeah, so unfortunately, if your children are indeed employees, right, and they don't fall under the exemptions for your LLC, so depending on how your LLC is set up, so if you're the only member of the LLC and is taxed as a sole proprietor, as long as your children are living at home, they're considered exempt from work comp coverage and you won't have to get a policy. If it's not set up that way, then unfortunately you would have to have a work comp policy for your children. In Idaho, we don't have necessarily, in terms of work comp, we don't necessarily have a minimum age that we deem them employees. It's basically are they employees or are they not employees? So the right to control test, as I mentioned, is made up of 4 pillars, and the first one is your direct evidence of right to control. So these are going to be questions that are asking or helping determine who has that control over that individual or individuals, right? Are you setting up the time that they can come in? Are you telling them what time they have to go by? What time they have to end their shift by? What days they're working? Are you providing them training on how to do the job? Are you requiring that they give you periodic updates or reports, or are you requiring them to attend monthly meetings, right? So that's going to help establish that control over that individual's workday. Pillar number 2 is going to be your method of payment. So these are going to be questions asking, hey, how is the individual being paid? Are they being paid hourly, salary, or are they being paid as a whole job itself, right? Employees normally tend to receive compensation either at an hourly salary or maybe even, what's the word I'm looking for? When you're a salesperson, payment that way, right, on each sale that you make. Whereas independent contractors, they normally get paid for the job itself, right? So they're going to give you a quote. It could be by square footage. It could be, by the hours they're thinking it's going to take, etc. And also the frequency of the payment, right? How are they being paid every week, bi-weekly, every other Friday, every 15 days, every 1st and the 15th, once a month, right? That consistency. Whereas independent contractors, more than likely, it's going to be, require the payment up front, or when the job is completed, or 50% up front and the other 50% when the job's completed, right? So there's not that consistency on the payment schedule. And also how are they being paid, right? So are they being paid from a business to a business or a business to an individual? So employee-employer relationships, such as my employment with the Industrial Commission, I'm being paid as a business. The Industrial Commission is paying me as an individual, whereas independent contractors normally tend to have their own businesses. So more than likely, probably will be either a business to business, or if you're an individual hiring an independent contractor to do a job for you, that's a little bit different. That would be probably an individual to a business, but you get the gist of that part of it. Section 3, or the third pillar, is furnishing major items of equipment. This is going to help us understand who's providing all the tools and equipment for this individual or individuals to complete the job. And then the last pillar is your right to terminate relationship without liability. This is normally what contracts tend to come into place. As I mentioned, not always will that be the case, but with independent contractors, it's always good to have a contract in place in case of a liability part of it. And also, it also helps establish who's taking on the burden if, for example, the financial burden of a mess up on the job or something similar to that nature. But it also helps determine, hey, can this individual up and quit the job without any liability, or could they be possibly sued for leaving you hanging dry? Employee-employer relationships in Idaho, it's a right to work state, so I can technically leave my job anytime and be perfectly fine without having to have that liability in place. All right, so some quick independent contractor facts. So the IRS 1099 form, reporting wages on a 1099 form by itself, it doesn't indicate that it's an independent contractor status. That's we see that quite frequently. Unfortunately, it would be nice if that was the case, but it's not. We would then use that right to control test to help make that determination. Exemptions, again, there's no certificate of exemption in Idaho. We just document it in our database and move on, essentially. Statutory employers, so if you are a general contractor and you subcontract a different business and they bring employees under them, they technically are the ones required to carry the work comp policy. However, if they don't have a policy in place and one of their employees get injured, the claim itself moves up the chain. So the claim will then be filed against your work comp policy, and it effectively makes you a statutory employer. With that being said, though, if any penalties are assessed for the employees not being covered by a work comp policy by their employer, you as a statutory employer won't take those penalties. Those will be assessed to the employer themselves, so the subcontractor. And we're starting to see a shift with, especially in the construction industry, where a lot of the general contractors are requiring subcontractors to carry a work comp policy, and that's mostly driven because of that statutory employer. And then the cost of no insurance, as I mentioned, in Idaho, there isn't a safety net for injured workers of uninsured employers. Without that work comp policy in place, the injured worker's recourse is to sue the employer personally. Again, goes back to that trade-off. When you have that work comp policy in place, you get that trade-off benefit. And then these last two slides are going to be misclassification examples. And again, these are just examples, so they're not necessarily to the T type information. But the first one, raising it from the left to right, is a small claim, so a foot crush in this specific example. The cost itself is $8,738. You tack on the 10% for being an uninsured employer penalty cost, brings it up to $9,611. Whereas if you would have gotten a premium on the right-hand side, that would have cost you about $3,681 should you have had that work comp policy in place. Where we start seeing the bigger differences on larger claims, such as a knee strain. This specific example is $122,256 for the claim itself. You tack on that penalty, uninsured employer penalty, brings it up to $134,481. Whereas if you would have had that work comp policy, it would have cost you a little bit less than $3,800. So it's a pretty big difference in those regards. With that being said, that's everything I have. There's our contact information if you have any questions. I'll be more than glad to answer them. Otherwise, thank you again for having me, and thank you for coming.
Thanks, Luis. Any questions for him? Yeah, 1044. Tell you what, let's take, Ryan Murphy may have a question. Hang on a second. Please stand by. Well, while Ryan is typing, if the rest of you want to take a quick break for 5 minutes, so at 10:50, we'll have Don Baltodonis from the Taxpayer Advocate Service. If you feel like taking a little break, now will be the time to do so.
All right, so Ryan asked, no audit or process to adjust codes, submit safety procedures. So the audit's going to be done by the surety themselves. And normally during the audit, if they do find something that needs to be adjusted for your policy in this specific example, they will be the ones making that determination. In terms of submitting safety procedures, yeah, they're more than likely going to ask you for that. For drafting safety procedures, I would recommend you speaking to an attorney. Unfortunately, we don't have the expertise for that specific part of it. I hope that answers your question, Ryan. If not, please feel free to expand and I can answer it to the best of my ability.
Okay, it is 10:50. Let's bring in Dawn. Thank you again, Luis. I appreciate it. Thanks for your expertise. Let's bring Dawn in.
Hi, Steve.
Hey, Dawn. How are you?
Awesome. I'm awesome. Hopefully you can hear me well.
Yes, ma'am.
Okay, cool. Thank you, everyone. I appreciate you attending today. So I am Dawn Baltodonis. I am the local taxpayer advocate. I'm physically located here in Idaho, but I'm currently the manager of the Portland, Oregon office. I am going to discuss a little bit about the Taxpayer Advocate Service, who we are, what we can do to help if you or someone you know needs assistance and they haven't been able to resolve it with the federally. I'll also cover some information about topics important to small businesses, emphasize some of the points that Steve and Luis have made earlier and that Irene will make, and provide some information about TAS and the programs that we support. So a little bit about who we are. Our NTA is Erin Collins. She started as our National Taxpayer Advocate in March 2020, right as COVID began. But she has more than 35 years of experience handling tax controversies at all levels of the IRS, including exam, appeals, chief counsel functions. And so she is a subject matter expert and an awesome National Taxpayer Advocate. On this third slide, I have the local information for the local office here located in Boise. Our main line, the 363-8900, our office fax number, because yes, we still use fax, and then my local number and my local fax number. Hopefully you will never need us, but if you do, save this presentation as a future resource and know that we're there for you. So, although the Taxpayer Advocate Service, TAS, is part of the IRS, we are an independent part. Laws changed in 1998, strengthened our organization and made us independent within the IRS. We provide free service to all eligible taxpayers, including individuals, authorized representatives, businesses, exempt organizations, and there are no income limits for eligibility. I'll discuss what eligible means in just a moment. A little bit more about us. Law 7803 or IRC 7803 identifies required functions of TAS. They are to assist taxpayers in resolving problems with the IRS, identify areas in which taxpayers have problems in dealing with the Internal Revenue Service. To the extent possible, we propose changes in the administrative practices of the IRS to prevent problems, and we identify potential legislative changes which may be appropriate to prevent future problems. We do this, of course, and take our responsibilities very seriously. I'll discuss just how we do some of these things through what we call case advocacy, and by working directly with the IRS for administrative changes and working with Congress for legislative recommendations to our annual reports. So we have 76 offices. By law, we're required to have at least one LTA office in each state, or local taxpayer advocate in each state. We do have more offices in some of the bigger states, California, Texas, New York, and we're currently hiring to fully staff all of our offices because the need continues to grow. So what we do, we protect taxpayer rights by striving to ensure that all taxpayers are treated fairly, that they know and understand their rights as outlined in the Taxpayer Bill of Rights, which I'll go over in a second. We help taxpayers, again, not just individuals, where a system or procedure has either failed to operate as it was intended, or efforts have failed to resolve the problem or dispute with the IRS. If someone qualifies for help, your advocate or case advocate will be with you at every turn and do everything possible to assist you. I'll cover some of our self-help tools and go over taxpayer rights in just a moment. So TBOR, you'll hear this acronym. IRS loves their acronyms. TBOR, Taxpayer Bill of Rights. The IRC, or Internal Revenue Code, provides taxpayer-specific rights. Our NTA years ago had them codified into law. She fought really hard for them. But the IRS employees are responsible for being familiar and following these rights too. Those 10 rights are the right to be informed, the right to quality service, the right to pay no more than the correct amount of tax, the right to challenge the IRS's position and be heard, the right to appeal an IRS decision in an independent forum, the right to finality, the right to privacy, the right to confidentiality, the right to retain representation, and the right to a fair and just tax system. There are full explanations of these rights and how they apply to certain tax situations. You can find them on our TAS website, taxpayeradvocate.irs.gov. Bottom line, though, know that you and your clients, if you have them, have rights when dealing with the IRS, and TAS consistently works on behalf of taxpayers to ensure that those rights are respected. A little bit about reports, our reports to Congress. Our National Taxpayer Advocate is required by law to submit 2 reports to Congress each year, an annual report that's due the end of December and an objectives report that's due in June. She delivers these reports to the Senate Committee on Finance and the House Committee on Ways and Means with no prior review or comment from the IRS Commissioner, the IRS Oversight Board, Secretary of Treasury, or any other Treasury officer or employee. The most recent annual report to Congress focused on the continued customer service challenges that the taxpayers are experiencing and the negative impact of the filing season backlogs. It includes an analysis of the 10 most serious problems encountered by taxpayers, as well as legislative and administrative recommendations for solving those problems. It also has a discussion of the year's 10 most frequently litigated federal tax issues. Sorry about that. So part of the report also includes the NTA's Purple Book. This contains 65 legislative recommendations designed to strengthen taxpayer rights and improve tax administration. The other report, the Objectives Report, is due by June, just came out, describes the goals, activities planned by the NTA and TAS for the upcoming fiscal year, identifies our objectives. It also provides a matter-of-fact review of the 2023 filing season. What's working, improving processing and answering phones, and what's not. Continued delays in key areas, some amended returns, delayed taxpayer correspondence, resolving identity theft cases. For more information, you can find it on our website again at the link above. So we're going to switch. Along with the State Tax Commission, Industrial Commission, and Small Business Administration, I did want to provide some helpful information geared towards small business owners. TAS really wants to reach out to small business owners to help, people meet their filing requirements. We want to share resources for information, tax return prep, and help you file accurate returns. Avoid issues that with the IRS later on. So, although this is a vast topic, I'm limiting my focus to key areas that every small business should know, and to which we've seen small business owners fall victim to with the IRS. So, record keeping, the importance of proper record keeping, paying taxes, specifically employment taxes. This is a huge area that can be the largest pitfall for small business owners. I'll discuss some truths and myths on the topic of paying taxes to help you avoid this pitfall. Then classification of workers, the employee versus contractor that both Luis and Steve mentioned earlier. Chat a little bit about properly classifying those you hire to work for you. Emphasize important points made by all of us in today's sessions. And then we'll discuss considerations for when selecting a tax professional if you choose to use one. So there are different types of small businesses, and they are required to file different forms with the IRS, and also responsible for paying different types of taxes. The chart here lists some of the required federal forms by business type. Each state, of course, has separate filing requirements based upon how a business has filed federally. Depending on a business setup, there also may be other taxes and forms that are also required. But sole proprietor, partnership, a partner in a partnership, C Corp or S Corporation, and the S Corporation shareholder. There's various types of returns and taxes that need to be paid. So the importance of good record keeping. As a small business, you may have many types of returns that are due, many types of deductions based on your type of business. As a busy small business owner, putting a user-friendly, less time-consuming system in place sooner rather than later will save you time and money in the future. You may need to substantiate income and deductions. Good records can assist you in preparing financial records, keeping track of property, deductions, and so much more. Good records can also assist you in knowing exactly where to target funding and reduce expenditures to optimize your profits. Okay, here. For the IRS, you may use any type of system that works for you and your business to maintain proper records for your income and expenses. In a few rare instances, the law does dictate the type of record-keeping system you put in place. Consider utilizing resources such as other small business owners, accountants, low-income tax clinics if you qualify. SBA has great recommendations on specific systems. A good system for a small business will require a little bit of training, allow you to quickly scan and catalog expenses and receipts in the proper categories. Many accounting firms may offer administrative assistance to train and make recommendations to staff in small businesses. But consider the time or staffing that you have to devote to this. A good system or hiring a service to compile records may save you time and money later. You may be a great carpenter, but maybe not so great an accountant. Good system, good accountant will still need oversight from you, though, and assist you in understanding where your largest revenue streams and expenses are coming from. This is a good way to know if a product or service is valuable and assist you in maximizing your business potential. You should review income and expenditures routinely and reconcile any items necessary at that time. Definitely don't wait for tax time to do this. The types of records that should be maintained: purchases, sales, payroll, other transactions that you have in your business generate those supporting documentation. These records contain items you must report in your books, and the supporting documentation should be maintained in an accurate, easy-to-access filing system, one that works for you and your business with the level of staffing that you have. Some common examples of record to keep include receipts by date, with what they're for, bills with the name of who you paid, how much, and the service. Can also be used to verify mileage. Canceled checks grouped with bills and reimbursement if applicable. Legal documents with descriptions, loan agreements with terms, logs or diaries, medical dental records, theft or loss documents, property records, employment documents, Schedule K-1, and any other applicable documents. Again, business owners need these records to support those purchases, sales, payroll, and other transactions generated in your business. Support for business deduction should be kept on a routine basis, generally daily, but at least weekly. Should provide adequate information that shows exact amount of income or expense. They can be kept electronically or in a written format. Should be overseen or accessible to at least one other person for purposes of continuity. And should be based on invoices, receipts, account statements, and other business papers. They should be organized for easy retrieval. And in the absence of adequate books and records to reflect income and expenses, bank account statements, canceled checks may be used to reconstruct income. Best opportunity, though, is to report income and expenses when your return, based on that good supporting documents, is timely filed. A little bit about gross receipts. Gross receipts are the income you receive from your business. You should keep supporting documents, again, that show the amounts and sources of the gross receipts. They can include cash register tapes, bank deposit slips, receipt books, invoices, credit card charge slips, forms 1099 miscellaneous or 1099 non-employee compensation. Some TAS tips regarding gross receipts. We recommend keeping gross receipts in a separate bank account from your personal bank account. Do not commingle business and personal funds. It is expected that you'd pay yourself a salary. Consider writing a check to pay yourself and then deposit it into your personal account to keep accurate records. Categorize documents electronically with a paper backup in specific categories. Some people use folders or envelopes. Is often a good method to be able to verify and access those later. A little bit about inventory. Inventory, of course, is any item you buy and resell to customers. If you're a manufacturer or producer, this includes the cost of all raw materials or parts purchased for manufacture into that finished product. Your supporting document should show the amount paid and that the amount was for inventory. Of course, documents reporting the cost of inventory can be canceled checks, cash register receipts, credit card sales slips, invoices. These records will help you determine the value of your inventory at the end of the year. There's IRS Publication 538, Accounting Periods and Methods, that has more detailed information for methods for valuing inventory. Again, a TAS tip regarding inventory: best not to use business inventory for personal purposes. We know sometimes that it happens, so if you must use business inventory, keep very good records of the inventory that you use, what it is, the dates it was pulled from inventory, etc. A little bit about merchandise withdrawn from sale. If you withdraw merchandise for your personal or family use, you must exclude this cost from the total amount of merchandise that you bought for sale. You do this by crediting your purchases or sales account with the actual cost of the merchandise that you withdraw for the personal use. You must also charge the amount to your drawing account. And the drawing account is just a separate account that you should keep to record business income that you withdraw to pay for personal or family expenses. You also use it to record withdrawals of merchandise for personal or family use. This account is known as the withdrawals account or just a personal account. Expenses. So expenses are the costs that you incur other than the cost of inventory to carry on your business. Your supporting documents should show the amount paid. The amount was for a business expense. Documents include canceled checks, cash register tapes, account statements, credit card sales slips, invoices, petty cash slips for small cash payments. A few more TAS tips. Again, do not pay personal expenses with business gross receipts, pay personal expenses from your personal bank account. There are tax return line items that may be legitimate business expenses. However, they could be questioned by the IRS. These include large purchases and not much income reported, items that do not appear to be related to the business. I think Steve talked about that Lamborghini. Large utility bills with a home office deduction, paying family members, paying expenses for family members. Some items not reflected on your income tax return can still be questioned by the IRS. For instance, having basic living expenses greater than the income you've reported, rent, mortgage, utilities, groceries, car notes, insurance. Other leisure expenses, again, going back to that Lamborghini, greater than the income that you've reported, clothes, jewelry, car, membership, box seats, vacations, etc. Tips on how long to keep records. These are recommendations for keeping records for federal purposes, and so may differ slightly from state requirements. But the federal assessment statute for tax you owe is generally 3 years from the date that you file the return or the due date if you do not file. The assessment statute for tax on income that you do not report is 6 years. If it's more than 25% of the gross income shown on a return or is attributable to foreign financial assets and is more than $5,000. The refund limitation statute is 3 years from the due date of the return or 2 years from the date you pay the tax, whichever is later. The period for filing a claim from a bad debt deduction is an exception, 7 years from when the return was due. For this reason, the general rule of thumb is to retain records for 6 years federally. A little bit about burden of proof. The responsibility to substantiate entries, deductions, and statements made on your tax return is known as the burden of proof. You must be able to prove certain elements of expenses to be able to deduct them. A lack of knowledge will not be an excuse if you're called to substantiate income, expenses, or credits in an exam. IRS and courts consider deductions a legislative grace. Some deductions are a result of expenses incurred by the business and reported on the tax returns, both personal and business. A taxpayer may be required to prove they're entitled to a deduction. In an audit or exam, the IRS determination is presumed correct if there are no clear supporting records. That's why record keeping is so important. If a taxpayer contests an IRS determination of income and expenses, the taxpayer must prove that it's incorrect, and that's where that supporting documentation will come in handy. Be aware of which deductions are allowable and which ones are not. Sometimes the deductions change from year to year and sometimes with each Congress. Most reliable source for deductibility of expenses is through a CPA, attorney, enrolled agent, as these individuals are required to keep abreast of changes in tax law. Be certain that all your deductions can be supported before you sign your tax returns. Again, just reminders, keep gross receipts in a separate bank account from your personal bank account. It's best not to use business inventory for personal purposes. Do not pay personal expenses with business gross receipts. Pay personal expenses from your personal bank account. For corporations, it is expected that you'll pay yourself a salary. You'll write a check from the business account and deposit it into your personal account. So a little bit about employment taxes. So why file and pay employment taxes? The law states that when you make payroll, you had funds available to make gross payroll, not just the net amount. There are significant penalties for failure to deposit, failure to file, and or pay the employment taxes. And many employers, unfortunately, make the mistake of only paying the net payroll, the portion that the employee receives. This has been, unfortunately, the downfall of many small business owners. When making payroll, the employer is responsible for their portion of the payroll taxes and the employee's portion of the payroll taxes. Failure to submit either of these amounts to the IRS, again, can result in significant penalties. Next few slides are just going over an example of a common error. ABC Company employs Indiana Jones. Mr. Jones' gross pay is $2,000. In addition to Social Security and Medicare taxes, Mr. Jones has requested $200 in federal income tax withholding. The very first error on this, ABC Company only ensures that they have $1,647 to make payroll. Second error, ABC Company has not yet considered its portion of Mr. Jones' employment taxes. Again, this calculation only considers the employee's share of employment taxes. The employer, you, the small business owner, are required to pay the other half of the Social Security and Medicare taxes, plus any other employment taxes that may be required by law. So at a minimum, the business is required to have $2,153 to properly make payroll. To properly make payroll, again, they're required to have all the funds related to Mr. Jones' salary, as shown, that $2,153. IRS has an electronic system for business owners to use to make required tax deposits. It's the Electronic Federal Tax Deposit System, EFTPS, another acronym, must be used to make federal tax deposits. A 10% penalty will be assessed if the Electronic Federal Tax Deposit is not used, or their system is not used when it's required. Businesses are pre-approved when the EIN, or Employer Identification Number, is issued. For more information on that, you can see the IRS publication 4275. Businesses can also enroll at the EFTPS.gov website. Businesses can make same-day deposits with wire transfers, and it's available to all businesses. Using the EFTPS is the most efficient way to ensure timely payment and receipt of federal tax deposits. It can also help you avoid penalties. Speaking of penalties, let's discuss the penalty that every small business owner needs to know about, the Trust Fund Recovery Penalty. So the Trust Fund Recovery Penalty, TFRP, is a penalty equal to 100% of the tax withheld from employees' wages and salaries. TFRP penalties may be assessed against any person who is responsible for collecting or paying withheld income and employment taxes, or for paying collected excise taxes, and who willfully fails to collect or to pay them. Quick note on the excise taxes: those include such taxes as fuels taxes, environmental taxes, communication, air transportation, there's manufacturer taxes, retail tax on heavy trucks, trailers, and tractors, ship passenger tax, foreign insurance tax, indoor tanning services. Quite a variety, but there is a federal publication 510 for more information on the different excise taxes. For the trust fund recovery penalty, who is a responsible person? Well, that's a responsible person is considered to be a person or group of people who has the duty to perform and power to direct the collecting, accounting, and paying of trust fund taxes. This person may be an officer or an employee of a corporation, member or employee of a partnership, LLC members, corporate director or shareholder, member of a board of trustees of a nonprofit organization, another person with authority and control over funds to direct their disbursement, another corporation or a third-party payer. We've seen this area: payroll service providers, PSPs, or responsible parties within a PSP, professional employer organizations, PEOs, or responsible parties within a PEO, or responsible parties within the common law employer, that is the client of the PSP or PEO. What is willfulness? For willfulness to exist, the responsible person must have been or should have been aware of the outstanding taxes and either intentionally disregarded the law or was plainly indifferent to its requirements. It doesn't have an evil intent or a bad motive. How to avoid it? So you can avoid the trust fund recovery penalty by making sure that all employment taxes are collected, accounted for, and paid to the IRS when required. make your tax deposits and payments on time. Again, additional information on employment taxes can be found in a couple of publications, Publication 15, the Employer Tax Guide, and Form 941, the Employer's Quarterly Federal Tax Return. So I am going to also emphasize, as Stephen Luis mentioned, there are various factors are considered when determining the classification of a worker, employee versus independent contractor. A few are listed on this chart. A business might pay an independent contractor and an employee for the same or similar work, but there are key legal differences between the two. It's critical for business owners to correctly determine whether the people providing the services are employees or are independent contractors. So some of this really does bear with repeating. For IRS purposes, the degree of control, behavioral and financial, and independence in this relationship may be reviewed and looked at. Behavior control covers facts that show the business has a right to direct and control what work is accomplished, how that work is done through instructions, training, other means. Financial control covers the fact that show if the business has a right to direct or control the financial and business aspects of the worker's job. That includes the extent to which the worker has unreimbursed business expenses, extent of the worker's investment in the facilities or tools used in performing services, the extent to which the worker makes his or her services available to the public or the relevant marketplace, how the business pays the worker, the extent to which the worker can realize a profit or incur a loss, and the relationship of the parties covers the facts that show the type of relationships that both parties had. This includes written contracts, oral agreements describing the relationship that the parties intended to create, whether the business provides the worker with employee-type benefits such as insurance, a pension plan, vacation, or sick leave, the permanency of the relationship, and the extent to which services performed by the worker are a key aspect of the regular business of the company. If the facts and circumstances are not clear, a written contract is always a good source that details both the business's and the worker's intentions. A little bit about selecting a tax professional. So there are various types of tax return preparers, including certified public accountants, enrolled agents, attorneys, and then many others who don't have professional credentials. You really expect your preparer to be skilled in tax return preparation and to accurately file your income tax return. You've trusted him or her with your most personal information. They know about your marriage, your income, your children, your Social Security numbers, EIN numbers, the details of your financial life. Most tax return preparers provide outstanding and professional tax service. However, each year, unfortunately, some taxpayers are hurt financially because they choose the wrong tax return preparer. So we always recommend check the preparer's qualifications, check the preparer's history, ask about service fees, ask to e-file. Make sure that the preparer is available, not just when they're preparing your return, but after the fact in case your return stops. And then make sure that they provide you with records and receipts. Other tips when selecting a tax return preparer: never sign a blank tax return. Always review your return before signing. Review details about any refund, including the bank account information. Ensure the preparer signs and includes their preparer taxpayer identification number, otherwise known as PTIN. Be sure to check out tips for choosing a tax preparer, and how to avoid unethical ghost return preparers, the ones that fly by night, come in, prepare returns, and then you can never find them again. There are, unfortunately, a lot of tax scams occurring now. The IRS will stop returns if it feels that there's something questionable on it. If this occurs, it may be many months before the issue is resolved, which, of course, could delay precious refunds. Really, bottom line, know who your tax return preparer is. The next couple of slides are resources. This one lists the IRS publications that may be helpful for small business and self-employed taxpayers. IRS Pub 15, as mentioned earlier, is another great resource for self-employed and small business owners. But Pub 1, your rights as a taxpayer. Pub 17, your federal income tax. 334, your tax guide for small business. 535 for guide to business expenses. 542 for corporations. 583 for starting a business and keeping records. And 5369 if somebody does DoorDash, Uber Eats, or some gig type of economy. You know your taxes, know your rights, and what you should save and prepare for. This next one is also some other resources. The IRS .gov has several other. This slide lists the 24/7 small business resources for you to access whenever you may need to. The links on the handout, if they're not live, you can go to irs.gov, just search small business or self-employed. There's a small business and self-employed tax center. There's forms and pubs. There are also small business tax workshops available. There's 8 lessons listed. They're available 24/7 at irsvideos.gov. These lessons provide and emphasize specific federal information that's important for small business owners, some of which we've covered today. Federal taxes and your new business, Schedule C and other business taxes, filing and paying taxes electronically, business use of your home, federal taxes when hiring employees or independent contractors, managing payroll to withhold the correct amount of taxes, tax deposits, and filing a return to report payroll taxes, hiring people who live in the U.S. who are not U.S. citizens. And the next couple of slides, I'll provide a little bit more information about when to come to TAS for help. Okay, so in general, we want somebody to contact TAS, or Taxpayer Advocate Service, when somebody is experiencing some financial difficulty, emergency, or hardship, and the IRS needs to move much faster than it usually does or even can under its normal procedures. In those cases, time may be of the essence. So if the IRS doesn't act quickly, for example, to remove a levy or release a lien, somebody's going to experience even more financial harm or injury. This includes, again, all types of taxpayers, businesses too, not just individuals. Many different IRS units and steps are involved, and the case needs kind of that coordinator or traffic cop to make sure everyone is doing their part. TAS plays that role. If someone has tried to resolve a problem through normal IRS channels, but those channels are broken down, you're not getting, you've sent something in, you're not getting a response, you're trying to call and nobody's answering or picking up. System or procedure has either failed to operate as it was intended or failed to resolve the problem or dispute with the IRS. If you want specific information on when TAS accepts cases, you can see our website, thetaxpayeradvocate.irs.gov. There are certain tax issues and time frames sometimes that that change or must be met before TAS can help you. I'll tell you about a new tool that we have. Well, it's probably about a year old now. So how to contact TAS for help. You can use this Can TAS Help Me With My Tax Issue tool that's on our website. If you do qualify for our assistance, it walks you through a couple of questions. There are a number of ways that you can request our help. If the answer is yes to those questions, then you can, it'll direct you to our Form 911 Request for TAS Assistance. You can print it, fill it out, and you can fax it or snail mail it. In some cases, you can email it into us. You can call our national intake line, that 877-777-4778. Best way in Idaho really is to go back to slide 3, hang on to these slides, and call our main phone line. If we can't take the case, we're at least going to give you information as to why and what to do. But you can usually 208-363-8900, leave a message with your contact information, maybe a little bit about what's going on, and someone from our office is going to reach back out to you, usually within a day. Working with the IRS can be a lengthy process, so the best recommendation that I can provide is to save copies of everything that you've received or sent to the IRS. If you need TAS assistance, please provide copies of those items when you send in that 911. Due to the age of some IRS systems, it is at times difficult and takes additional time for us to request those records from the IRS, and sometimes we won't have access to them. So sending copies of those documents to us with that Form 911 will likely have saved time and save us from having to ask you for them once we open a case. So a little bit about working with TAS. As I mentioned earlier, TAS's mission is to advocate on a taxpayer's behalf. TAS will advocate with you and on your behalf and be your voice at the IRS. In general, you'll be assigned a case advocate until the issue is resolved. Contact's usually made within 7 to 10 days from the date that we receive the request for assistance. When the case advocate contacts you, they'll attempt to clarify the issue, request the needed documentation. Again, if you've sent it already, you're already steps ahead. However, if you don't send it and we need it and you don't provide it, we'll make a second request in writing, but we may have to close the case if without further contact if you don't respond and provide that information. It just means that you'll have to deal with the IRS directly. You may receive an estimated expected date of completion. You'll receive a next contact date, but these dates can vary sometimes depending on different factors: your response rate to our request for information, the number of IRS business units involved in the resolution, IRS response rates, delays, and much more. Throughout the case, you can be expected to be contacted 30 to 45 days, again, depending on the type of tax issue. The case advocate will inform you of your next contact dates. If you don't hear from them, you may hear from somebody else in the office if they're out for any reason. Although we usually work cases by geographical locations, cases can be worked by any TAS office in another state. This will not delay contact. We're simply ensuring inventory spread as evenly as possible across TAS offices to be able to timely work the case. Our offices really do help one another out. For instance, currently the Idaho office has been rebuilding over the last 6 months. We've hired new case advocates, but they're not all trained. So some of our cases, not all of them, but some of the cases for Idaho were temporarily being worked in Wyoming or Montana. But our case advocates should be thoroughly trained in the next month or two, I think. So that's really exciting news. At case conclusion, we will address actions taken, the outcomes, resulting balances due or refunds. We'll discuss any avenues of appeal before closing the inquiry. We'll provide that education and, if appropriate, on the cause and how to prevent future problems. Please note that TAS does not always have the authority to take an action that you may be requesting. So we'll have to ask the IRS to take that action. We have some tools, one being a Taxpayer Assistance Order, TAO, or TAD if the NTA issues it. It will direct the IRS to function to cease an action, take an action as permitted by law, or refrain from taking an action when the taxpayer is suffering or about to suffer a significant hardship as a result of the manner in which the IRS laws are administered. The role of the TAS is not to request that the IRS break a law or disregard procedures, nor to substitute our judgment for that of the IRS. So at times we are limited in the way that we must or may assist, but we will keep you informed if this occurs. Always, too, remember that TAS never charges a fee. Our services are always free. And then just 2 more slides about programs that we sponsor. I wanted to mention the low-income taxpayer clinics. These are independent from both the IRS and TAS. LITCs represent individuals whose income is below a certain level and who need to resolve tax problems with the IRS. LITCs can represent taxpayers in audits, appeals, and tax collection disputes before the IRS and in tax court. That is something that TAS can't do. In addition, LITCs can provide information about taxpayer rights and responsibilities in different languages for individuals who speak English as a second language. Their services are offered for free or a small fee. We have 2 LITCs in Idaho, one in Boise at University of Idaho, and then one in Twin Falls. La Posada, Bob Wonderly and his staff do a tremendous job with helping thousands of people each year. Another TAS program is our TAP. It's Taxpayer Advocacy Panel. This is an independent panel of citizen volunteers who have listened to taxpayers, identify taxpayer issues, make suggestions for improving the IRS, both service and customer satisfaction. So if you or someone you know has ideas about how to improve the IRS, I definitely encourage you to go to the improveirs.org website. There's a submission page that'll guide you through what to input and how to input it. But TAP has forwarded more than 2,039 recommendations to the IRS. Our volunteer members act as a two-way channel between the IRS and the general public, listening to taxpayers, identifying issues, submitting recommendations, resolving problems, and monitoring progress and implementing and maintaining solutions. Again, so if you have somebody or you have ideas about how to improve the IRS, this definitely suggests that you go to this website. If you do want to know more about TAS, you can check out our website, taxpayeradvocate.irs.gov. You can find us on the irs.gov website. Just scroll all the way to the bottom and one of our unit is listed. And then we, of course, are on Facebook, on, what is that, X now, not Twitter? So our NTA has a very straightforward blog that she does every month that I highly recommend. So I covered a lot of information and really just want to state, if you remember nothing else, remember that the Taxpayer Advocate Service is your voice at the IRS. Should you need help and you can't resolve something with the IRS, know that we are there for you. So thank you for attending today, and I'll pass you back to Steve and Irene.
Thanks, Dawn. If y'all have any questions for Dawn, go ahead and type them in the chat. We're going to roll straight to Irene because we're running really late right now. So I'm going to bring in Irene, and we're going to start with the small business administration stuff. So give me just a second here. Maybe. Yes, I do. Oh, hang on. I got to do this first. Do this. I do this. Maybe. Hey, Irene, with us? Why don't we take a couple minutes, everybody, and we'll wait for Irene to get back. Give us just a couple minutes. Thanks.
Yeah, my screen's up.
Yep. Yep. So, Irene, we are ready whenever you are.
Hi, Steve.
Hey, how are you?
I'm good. Good. Okay.
I don't know if you've noticed, but we are ready for you whenever you're ready.
I see that. All right then. I got 20 minutes to take this down to the finish line. No worries. So, with that said,
here you go.
I may be speeding through the latter part of these slides, so you guys do have these in your handouts, and I'm happy to visit with anyone later if you'd like to have more time, but I'm going to run quickly through a business planning process. So hopefully you all have business plans in place. If not, this will be a great introduction or a refresher. So hopefully you'll have a few nuggets you can take away. So with that, yes, we do know business planning is essential. You wouldn't build a house unless you had blueprints. Same thing with your business. Make sure that you have steps in place to see how is this business going to be successful. What am I going to do for marketing, operations, financing? Plus, it is an opportunity to set goals, monitor your progress, and of course, adjust your course. So your business journey is determining which mountain, routes, resources, schedules, metrics, all of those questions. And so hopefully you have those in your forefront and you have got measures and steps that you're taking into account to see how the business is running and operating. Because we know failing to plan is planning to fail. So having some type of a navigation system for challenges, or how are you going to work through different situations. And if you don't already, I would encourage you to put together your elevator pitch. And if you do, this would be a great time to have someone listen to it, making sure that you've got your 1 to 2 sentence that you're going to share about your business. So essentially 30-second elevator pitch. This is what you would provide to someone who is in an elevator with you, and it takes about 30 seconds between each floor. What would you tell them about your business? Same thing if you're going to a networking event, saw someone in a restaurant or on the street. What would you say about your business in that amount of time? And then, even though we talk about a business plan, I like breaking it down into smaller pieces. And so think about working on your marketing plan, your operations plan, and your financial plan, all separately, and then you'll put together an action plan. Who's doing what, when, where, why? So, diving into it, this is kind of a big picture, if you will, of putting your business strategy together. You come up with your elevator pitch, so kind of explaining what the business does, who you do it for, what's the outcome. Put together your description of your products or services. Most importantly, how are you different? And this is in the customer's eyes, and how you're different from other companies or competitors. And then the marketing. And that is what's in it for me, right, from a customer's perspective. And how are you moving people to buy your product or service? So what's the draw? What's the carrot? What are you solving? And then your operations. That's your day-to-day. What do you do every day? How are you managing inventory, maybe equipment maintenance? Maybe it's your day-to-day marketing or your supplies. And so putting together your operating plan. All right, so talking through your marketing plan, what is your value proposition? So why would I choose you? How are you different? What makes you stand out? You've clearly described your products and services. Yes, I love the SBDC. Oh, thank you, Dennis. Yes, we will definitely show a resource for folks to connect to. Customers, how do you reach them? This is all part of your marketing plan, so we'll go into some more detail with that. Operations plan, people, headcount, training, what's your structure looking like? If it's just one today, and today's all about employees, so where do you have people? Where are you looking at them? Where are they set? What do they do? Are they in the right places? What's your facilities look like? What's the setup for that? What's the monitoring of those intricate pieces? Manufacturing, what's your manufacturing plan? Supply chain, what's your backup A, B, C, and D, because we know there's a shortage or it's not going to get to you on time. Research and development, what are your steps? Systems. And so part of this operations, I always encourage folks to look for ways to be efficient, effective, streamlined, and automated. And so look for ways to streamline operations. Financial plan. So again, this is talking through your costs. So as a business owner, you should know where you are at financially at any given time. Hopefully you don't look at your financials once a year, and even if it's quarterly, semi-annually, know where you are at weekly. So you know that you can manage those monthly expenses, monthly goals. What are you charging? What is your overhead? Are you making a profit? What is your realistic growth over time? How are you managing that? So lots of different variables to answer. And the financing component is so important. And we want to make sure that businesses are looking at all the different elements. And then you have your action plan. And so I like encouraging folks to put together a 1-year plan, a 3-year plan, and a 5-year plan. So part of your 1-year plan is looking at the next 90 days. What am I going to be doing? Who's doing it? What are they doing? So answer those W questions and the H. Who, what, where, when, why, and how. And then prioritize those steps. What's going to be driving margin? How are you making the business visible and relevant to your customers? How are you retaining existing customers? And how are you going to attract new customers? So again, these are all part of not just the action plan, but your marketing and your financial and operations plan. All right, so quick overview. Digging deep into it. Describe your business. How are you different? And businesses exist to solve a problem, meet a need, or fill a desire. So where do you fit? And are you doing that? How are you doing that? Is it relevant? Are you getting feedback from your customers? Are you understanding their needs? Are you staying connected with them? Come up with your company's mission, core values, and then incorporate those into your short-term and long-term goals. So again, going back to that 1, 3, and 5-year plan, list out what those goals are. Give them time frames and dates, and are they relevant to your business model? And that may be different from when you started to where you are at today, or even where you want to go. So your model may be adjusting, and you might need to be pivoting. And then your strategy. What is going to be your strategy, and how are you going to achieve those long and short-term goals? And then strategic partnerships, my favorite part. Look for ways to collaborate and work with organizations, other businesses, community organizations, even competing companies who you may not have direct competition with, but maybe you do just a piece of it. I like saying that you should not be doing all the marketing yourself. There's an array and a nice ecosystem that you can be collaborating with. And we'll talk about some ideas there. So, first and foremost, if you haven't already, I would encourage you to put together a SWOT analysis. So essentially, you're looking at yourself and you're looking at the business. And so, you can easily Google SWOT analysis and look at different formats and such, but essentially you're going to be identifying strengths. What are the strengths of you personally? What are you good at? What are you comfortable with? And it could be the trade or the service or making the products. And then the strengths that the business has. Where is it aligned with competition or the location or within the industry? And the weaknesses. What are the weaknesses of you as an individual? What are you not comfortable with? What's not so fun to work on? And typically they're financial statements, right? Or bookkeeping. Those are areas that aren't always a fun But at the same time, weaknesses are just as important as your strengths. If we keep putting them back on the back burner, we're just going to forget about them, and then they're going to start to pile up. So look for someone to contract that out with, or maybe that's an area that we need to be more knowledgeable in. Or even if you do hand it off to an accountant or bookkeeper, know enough about it that you can ask questions. And we'll talk about that later. And then what are the weaknesses of the company compared to competition? Where do you fit? How is the company aligned with what else, with the other options that are out there? And then, opportunity. So these are looking for those collaborations. So getting yourself out there into a larger audience and being able to connect. And look for other referrals or other links or other eyes that you can be in front of. And look for ways you can do long-term relationships or maybe short-term partnerships, and then being able to work towards those. And then the T is for threats. So I look for threats that are both internal and external. And these are things that would be beyond your control and that could put the business at risk for being in operation. Or let's say you're an online business. What happens when the website goes down or the payment method gets tweaked and people can't? If they find any issues, they're going to go someplace else. If you have a brick and mortar, either the city or developer decides to do road construction, which is actually, I've been working with communities who are going through that right now. Very, very challenging. And you may not have options, but what is the most feasible? What could you survive? How could you work through it? So it's coming up with a plan and learning to be more proactive versus reactive. So definitely do your SWOT analysis, and you can do SWOT analysis as the business grows, as you go through different phases, wanting to make sure that you keep up with those economic challenges and changes. All right, so again, part of this business plan checklist, go through, and there are resources who can certainly help review your plan. There are samples out there that you can definitely use. Don't think of it as this 30-page document. It's going to describe the goals, the timelines, and steps that the business is listing in order for it to be successful, or the goals that it has set for itself. So you're listing products and services with your descriptions. What problem does your product or service solve? So it's really understanding how does it fit? What is it looking for? How is it connecting to the customers? And then how is it different from what's already out there? And then who's going to buy it? So you're creating a customer profile. How do they know that you exist? Where are you at? How will they find you? And how much are they willing to pay? Have you done your cost analysis? And then come up with your company's vision, mission, and core values. This is where you tell your story. This is where we love small businesses, and so this is where you're going to share the about us and what is it that the company is striving to become. Because we love to be part of a small business's story. Key customers, this is where you'll create your customer profile, list out your suppliers, distributors, and come up with that plan of it, that A, B, and C. Are they able to meet your demands as far as, are they able to meet the time frames for the deliveries, or even what you're ordered? Are they out of a certain stock? And so what is your backup plan? And then competition. Search at least 3 competitors, 3 to 6 that are out there who do similar to what you do. Check out the website. How are they different? How are they similar? Because we as consumers are already searching, and so we're looking for who can provide me the best or who can meet my needs. So we want to make sure that you're staying aligned with what's out there. So as part of that marketing plan, do your market research, find your niche, understand your customer and the competition, and how are you best positioning your product or service to meet your customer needs. Is it all by word of mouth? Is it on different social platforms, marketing events? And then how are you describing the value? And who uses it? Why is it important to them? So are you touching on that problem-solving component? So here's a fun diagram. Over on the left, you're describing your product or service. And so what are the features? So if we're looking at landscaping, I've got some great tools, I got great equipment, I can do wonderful things for your yard. As a consumer, I'm thinking, okay, that's great, but what are the benefits? What are those tools going to do for me so I can reap the benefits and I can have an exceptional experience? So think through your product or service features. What are the features? What are the benefits that it provides? And what kind of an experience are your customers going to receive? And then when you go to the customer side, really, truly understand your customers. Because without customers, you don't have a business. So what are their needs and wants? What are the problems that you're trying to solve for them? So this is getting more into the emotions and the connections that you're reaching your customers. And then the fears. The fears are, this is a new company. I don't know anything about them. How can I feel trusted with them? And so business is all about building trust and building relationships. So what steps have you put in place to meet those needs of your customers? How are you letting them know, I've got a 30-day money-back guarantee. If something doesn't work out, I'm happy to come back. I'm happy to fix it, talk to you about it. It's like, oh, great. So I feel like I can now build a relationship with them. So define your market, create that profile, competitors. You may have different market segments. You don't have to have one target market. It could vary geographically by age group, and then what media sources are you using. So by creating, as part of your marketing plan, creating these different topics into different categories, different pockets, and then work on them individually, that will help you really fine-tune marketing. Ask those questions to your customers. Really understand them, really get to know them. What are their problems? How long have they been having it? What are they trying to fix? Build those relationships and then listen to them. Because we may not know exactly how to word what we're trying to say, so you're the expert. You're that person who really understands the industry. So if I'm over here talking to my landscaper and it's like, well, my flowers aren't growing. It's like, well, what kind of soil do you need? Maybe you need this kind of fertilizer. And it's like, so what do I really need to do? So be on the same page and say, you know, from what you're explaining to me, this is how I understand what you're looking for. Did I get that right? And so ask those questions to them. Do your market research on the competition, market trends. There's great databases, and we've got resources who have access to these databases that can be very helpful for you. So definitely look at the demographics, psychographics. This is going to help with how many times, what's the frequency, how often, where are my customers, how can I connect with them? So a lot of different parts and pieces. There's other resources that can be helpful. Use your libraries. If you're in the Meridian area, they've got a tech library that's called Unbound, and you want to, if you're looking at podcasting or 3D printers, you can utilize services there. So lots of great resources for you to check into. Also, ultimately, your business must attract enough customers to be profitable. So how many customers do you need? How many products do you need to sell? How many services do you need to sell? So again, go down the checklist and determine who is going to buy your product or service, what's the value, competition, the best way to reach your audience. How are you going to get repeat business? Are you a one-time sell or a multiple sell? What are they going to come back for, and how is it different than what they bought before? So what's the frequency that they're going to be reaching out to you? So here's your marketing challenge. Come up with your marketing plan. What's your product or service, target market, competition, your message, and how will you market? So know your customer, understand your brand, and your brand isn't just your logo or your colors. It's selling the experience, and it is all about benefits. And be consistent across all your platforms, all your marketing collateral, so that it's all saying the same, because we don't want it to be have to be any confusion. And then the right channel. So how are you reaching your customers? Have it be unique, understood, and updated. So ultimately, you're answering the question of what's in it for me. If I come to your establishment, what am I going to find? Is it going to meet my needs? So again, going back to how are you moving people? How are you drawing them? How are you connecting with them? So here's your marketing plan in a nutshell. Business description, research and pricing, customer profiling. You've done your competitive analysis. You've got marketing goals and objectives. You've got strategies. Do you have a marketing budget? Sure, we always look for things that are free, but set aside $500 for specific direct marketing, because you know this is where you're going to reach the majority of your customers. And then how are you measuring success? What's working, what's not? A few ways to generate leads, networking, website, create champions, people who can talk for you, different strategies, call to action, taglines, email, phone, websites, brochures, press releases. Let folks know that you're going to be opening. Create brand awareness. Start to lead up to a soft opening. Let folks know, hey, this is coming. So focus on the benefits rather than features. Focus on what problem you're solving. Create that emotional connection with your customers. And look for collaborations. Look for those opportunities. Remember, the brand is not about you. It's about your customers. You're their solution, so you're their solution to what? So again, solve a problem, reduce that fear, give them a new and valuable perspective, exceed their expectations, help them feel understood. So don't talk above, come down to their level, because when you don't meet their needs, we're going to go someplace else. Financial plan. Most importantly, it shows that the business will generate, how the business is going to generate and use money. It's going to show your financial projections, your sales forecast, expense budget, how you're going to expense your budget, cash flow statement, balance sheet, and your break-even analysis. So most importantly, if nothing else, have those statements, and partners can help you. So here's where I'm going to fly through the rest. I want to get here to the end. Lots of different methods of financing, business plan, model canvas. Here's a growth wheel to help you through your business planning. Business strategy, build your team, resources, a few points on productivity and pivoting. So be relevant, prepare to plan, and be agile and inventive. Most importantly, break projects down into manageable steps. Work on SMART goals. Reach out to your resource partners. The SBDC, as was mentioned above, thank you for that. They are located in 6 locations throughout the state. They are no-cost business resource. They can help you with all that we've talked about today. The SBA we've got on our national page, we've got templates, tutorials. We have lots of great resources that can help you score. Is also a great resource they've got on their national site. Lots of great information for on-demand tutorials, blogs. So definitely tap into your resources. Whew, okay. That was a lot. Thank you, Steve. I hope you all got a few nuggets. If you need to visit further, my contact information is here, so feel free to reach out to me.
Wow, that was quick.
I know, right?
Thanks. I'm so sorry I ran. I'm sorry I ran that late.
No worries. I am used to sliding in.
Well, we're right at 12 o'clock. I know we're a couple minutes late. I'm really sorry for that, everybody. I hope you got some really good information out of this. I'm going to stop the recording right now. That's what I'm going to do.